Everyone's heard about crypto, but how many people really understand it? What is even crypto beyond the hype? How does a blockchain work? And do most crypto projects even need a coin? The following is a conversation with Yazan Al Kharouf, a seasoned crypto trader and educator who's been in the game for over 10 years. From discovering crypto to mastering day trading, we explore how blockchains work, what are smart contracts, and what the future of the industry really looks like. So if you've ever been curious about crypto, wondering how blockchain works, or trying to make sense of what all this Web3 hype is, then look no further. This episode is for you. And if you enjoy this episode, guys, if you could please do me the small favor of hitting that subscribe button, would really help me build the show and build the channel and bring more amazing guests and inspiring conversations. But that's enough for me for now. Let's get to the episode. Hey guys, welcome to another episode of Hope It Helps. And guys, today I have a very special guest with me, someone I've had actually the privilege of meeting just a couple months ago. Please welcome to the show, Mr. Yazan Al Kharouf. Yazan, welcome to the show, man.
Thank you for having me, man.
Wallah, thank you so much for your time. I really appreciate
pleasure.
it. So, just to give the audience some context, so Yazan and I met at some crypto event at night, some talk.
Was it the Formula One?
No,
The
it
first
was
one? No,
it was that.
It was the Money Monday.
Yeah, Money Monday. Thank
Money
you very
Monday.
much. So I got to know Yazan there. For people who don't know, Yazan has been in the crypto and Web3 space for like almost 10 years now, and he's a KOL, or as for people who don't know what that means, because I didn't for a long time, it means an influencer in the crypto space. So we hit it off straight away, and it was really interesting listening to how things have developed for you over the last couple of months. I know you also launched now Al Kharouf Capital, so I want to dive into that because that was something new from our last conversation. And what I wanted to do today, Yazan, is basically give the people out there just like a intro into this space, because so I had someone on the podcast recently, we talked about AI, and now because I've been attending blockchain and Web3 conferences and getting into the space, I'm starting to understand why it still hasn't been fully adopted to like the general public, which is I would consider myself to be a part of. So I wanted today to give people an idea like of the terminology, the ideas, ways they can get into the space, and the reality of what being for example, KOL in this space actually means and why it's so important. But before we get into everything, Yazan, why don't you give all of us a little bit of background about yourself, and we'll take it from there.
All right. My name is Yazan Al Kharouf. I'm 26 years old, about to turn 27 soon. I studied mechanical engineering, graduated, finished mechanical engineering, worked in mechanical engineering in Germany. So the best place to do mechanical engineering in the world. 6 months into it, I realized, even though I was doing something called seatbelt development, which is kind of important, but what I realized is I thought like, okay, now I'm developing something that's saving lives.
Mm-mm.
But what I realized into that is that basically they're now just working on reducing cost.
Okay.
And the development of seatbelts has literally like peaked.
Mm-mm.
And there is like nothing that can make a seatbelt safer. And during that time, I was also doing crypto. And I would just like open tabs while sitting at the office. It was COVID. And I would be like going to CoinMarketCap, checking the charts. And I remember at that time, it was like end of 2020, and Bitcoin was going to like 18K, going to all-time highs, and everyone started talking about it. And that was when I realized, because I had knowledge about it and I was invested in it. And I was like, this is like the talk of the town. Everyone is talking about it.
Exactly, yeah.
And it's like, now it's getting their attention. Maybe this is like really what I should pursue. And after that, like a few months later, I basically told him like, I'm not coming back. Like, I'm just gonna do my own thing.
Mm-mm.
And that was like my decision to fully dedicate my life to something that I just like, completely opposite to something that I just finished studying and graduated from.
Yeah.
So that was like a bit challenging, kind of like to make that type of decision, because you've invested so much time studying something. But that gave me like a very new mentality. And it is basically anything that is new is going to be challenging. But in this world, 2025, you always have to be open-minded to make a career shift at any second.
Yeah.
With AI, a lot of people are going to lose jobs, even though I think a lot of people are going to get new jobs. But if you think you're at risk now because of AI and you are replaceable by AI, just find something else. Like, there's plenty of things, and you can't be only good at what that thing that AI can perfect too. So that's like a little bit on my background. Right now, I'm pretty much a trader, a crypto trader. I personally don't like the term KOL, for example.
Okay.
It's key opinion leaders
Yeah.
or influencers. And what I dislike about it is that a lot of them are willing to do anything for money.
Okay.
A company comes to them, promotion, we'll pay you this much to do 1, 2, 3. They make a post, and they have absolutely no care about what's going to happen with their audience. So I am a content creator. That's one thing for sure, even though I haven't been creating much content lately. But that's the thing, is that I grew a platform not because I wanted to be a content creator, just because I had things to say, and I just started posting them on Twitter. And you get audience, and then I was as well like doing Twitter Spaces, get extra audience. Some people like what I say. I started being invited to shows here and there. I started even early on when the meme mania started with Pepe. I was one of the people that were hosting spaces for Pepe
Oh, no
from
way.
the beginning. And
Okay.
that's one of the reasons I blew up.
Okay.
So I went from like 100 followers to like 15,000 followers in a couple of weeks.
Wow. Wow.
And it was insane, because even like a few months after, at the peak, I had like 50,000 plus listeners to one Twitter space, which was like live, and that was absolutely insane. 50,000 people.
That's live as well.
Yeah, and on Twitter, and it was
yeah,
like
and on Twitter too.
and on Twitter, and like, how did this happen? Like, but yeah, I had insights to give, and I was always against lack of research, lack of thoroughly looking into every message that's coming into my DMs asking for a partnership. So I received hundreds of offers when I was doing spaces, like, hey, do this for this project. At first, I was looking into the projects. Is it safe to talk about? In 99% of the cases, I don't feel confident to put a penny in, and I would feel guilty to talk about to my audience about it. So I kind of started like withdrawing, no. And then at one point I literally like stopped researching them. So now I'm only willing to work with projects that are already vetted by someone that I know. And then I will do my due diligence and research into them. And then I'll make a decision on whether am I going to continue or not. It's a very crazy space to be in, to be honest. I just moved here in Dubai like 6 months ago.
Yeah, I think when we met, you had just come.
I had just
come.
moved.
Right, yeah.
Just moved to Dubai, and I opened an investment company. It's still not active.
Okay.
It's just there, waiting for the perfect opportunity. On daily basis, I'm a day trader. I manage my own portfolio and the portfolio of one client, and that's pretty much it. So I do the trades all on spot market, and now we'll get into the terms. What does that mean?
Yeah, I didn't. Sorry to interrupt you. I didn't know you were a trader too, because now that you brought trading into it as well, I have so many bad stories to tell you about.
And the other thing, by the way, I didn't even mention it. I worked with a few crypto companies. One of them was Cointelegraph. Another one was Waxman. I worked with a few dozen clients with each. And I've seen how the industry looks from the inside out. And I also work with on-chain investigations, and we'll get to that. Basically tracking cryptocurrency transactions, seeing where is money going from and where does it end up to, especially in cases of scams, theft, and these types of things. I worked in helping some of the governments, European governments, tracking certain hacks, getting on certain activities to help them find where did the money go to. So I have all the experience and the knowledge necessary except for writing the code.
Okay.
That's where I tell you, I
Okay.
don't know nothing about it.
Fair, honest.
And I wanted to get into blockchain development. And then I was like, why would I get into this? Do I want to be the guy coding the contracts that get exploited?
Yeah, yeah,
and then
yeah.
be the guy
You're liable.
That's not something
Yeah,
I'm willing
yeah.
to do. I don't want to go into that route.
Fair. So, very interesting how so you started with seatbelts, you realized there's nothing going on here, and you decided to get into crypto full time and learn about the industry. And you made a good point that anything new, whether it's technology, anything you're doing, it's going to be a challenge. And there's going to be a teething phase before you even start to slowly, figure things out. But before you even got into, started working in crypto, I just want to take a step back. How did you even hear or get into crypto for the first time? Because that's where it all starts.
That's the fun part. So what happened was that I was just a kid back then, 17 years old or something, 18 years old. And I was on online sites that need a chat moderator, and they have a chat and there is a community and people talk to each other. And I worked with one website, and they were giving us pretty much salary in gift cards at the beginning. And then they decided, let's get a bit more serious. There's Bitcoin, and how about we start paying them in Bitcoin? And that was the beginning, because I had no idea, and I was confused. I was even pissed. What is Bitcoin? Starting research on it. It's online money, it's a cryptocurrency. How can they send it? Nothing made sense. I remember that time how confused I was. And it was me and another colleague at the time. We're trying to figure things out. We found some sort of a wallet called blockchain.com. And we were okay, this is a place where we can store the money. And at that time, I think I was making $200 a month. And for me, it was a fortune back then.
Yeah, of course. At 17, you're chilling. Yeah.
17, 18 years old, $200. Life can't get better than
Life's
this.
great, 100%.
Yeah. So I started receiving money in Bitcoin in April 2017. And throughout that journey, I was trying to figure out, okay, now I'm getting money on a wallet and I have absolutely no idea what to do with it. I'm clueless. What am I going to do with it? And then I was living in Jordan at the time. I try to look into it, and then I find something called Jordan Bitcoin Traders Group.
Okay.
I joined the group, request to join the group. It's a private group. And there's
They always are.
Yeah, a few hundred people in the group. I join it, and then I realize people are buying and selling Bitcoin. I was okay, this is interesting. I found out about it. I wanted to sell Bitcoin. I had, I think, $400 in, and my phone just completely went insane, and I lost the two-factor authentication application on my phone.
No.
It did a factory reset. It was an HTC One M8. I'm never gonna forget the phone because it was my reason that I stayed in crypto. Now you're gonna know why. So the HTC One M8 decided to die completely, and when it turned on again, it didn't have two-factor authentication. The good thing, blockchain.com wallets have KYC verification, and I was KYC verified. So when I got a new phone, I went through the KYC verification process to remove two-factor authentication. What is two-factor authentication? I assume you know. It's the UAE pass.
Exactly. The extra,
the extra step.
Excellent. Yeah. The extra security step.
The extra, when you get a code on your phone when you're buying something with your card, that's two-factor authentication. Remove two-factor authentication. Access the wallet 2 weeks later. Bitcoin's price tripled during the 3 weeks. And I went from $400 to $1,200. And I was actually, I didn't buy a new phone at the time, but I bought the phone with the money. I was free iPhone. Free iPhone.
Exactly, yeah.
And still at that time, that amount of money was absolutely insane to me. And I was like, this is free money. Like I didn't kind of like process what exactly it
Has
was.
happened. Yeah, like what happened here? Yeah.
Yeah. Like it was, I don't know, maybe 0.25 Bitcoin or something like that. And I was like, I just made $1,200. This was supposed to be $400. I'm up. And then I had to justify the purchase for my parents. Like I had to tell them, and they were like, why would you spend that much money on a phone? You're like 18. You're like just getting started with the university. It's good to have savings. I was like, it's free money. Like,
I didn't put more to get this. I just put this. Yeah.
It's like, it's completely free.
Yeah.
And this was like a fun journey. And then like slowly I was like, but why did it go up? How did the money go up? Because the first thing I contacted my employer, I was like, hey, I just opened my wallet. Did you by any chance send the $1,000 instead of $200 on the last salary? And he was like, no. Did you send me anything extra? No. This is just Bitcoin went up. What's that supposed to mean? But then I got to understand what that meant. And then I started researching it. Why did Bitcoin go up? What else could go up? And then started to get deeper into it. Now you have, coin market cap. You see hundreds of cryptocurrencies, each claim to be the best at what they do. And you're just there like looking, scrolling through hundreds of coins, trying to figure out what to buy, what to sell. And then like slowly, first of all, okay, what's Bitcoin? Okay, now then I understand it's a cryptocurrency. It can be stored in wallets. But then you read about Ethereum or Litecoin. And I'm like, okay, how does this connect to that? And then, okay, it's a copy paste of the code, but how does it make it more valuable? Then they tell you it's faster, it's cheaper, it's easier to do this, it's easier to do that. But how can I buy it? At the time, there was no USDT. There was no stable coins. That you could only trade for Bitcoin. So the only way to buy Litecoin or Ethereum or anything else was to trade your Bitcoin for it.
That, yeah.
So your entry was you need Bitcoin to get into anything that you would want. And that was like part of the journey, like going through and learn like this stuff, getting scammed here, getting scammed there, watching YouTube videos, a lot of YouTube videos. I remember like spending, and this was like one of the biggest mistakes I've done, is that I relied on content creators as a resource of information. But they're not usually the best source of information. And that's like one of the craziest part, because they're the people with the most following, and they seem like they are the most knowledgeable about this topic, but are they? And that's where the big gap was, and I only realized that in 2020. How did I realize that? When I lost all my money, every single penny that I had at the time, to something called leverage trading, futures trading. And it's a way of trading that you could risk basically all of your money, and you can lose all of your money. Now, if you buy Bitcoin right now, it's 96,500. If you buy one Bitcoin and it goes to 50,000, you don't lose all your money. You still have one Bitcoin. Even if it goes to zero, you still have one Bitcoin that's worth nothing. That you technically lost your money, but if Bitcoin goes to $10, now your money is worth $10. With leverage trading, there's none of that, because you have technically none of the asset. And at that time, everyone was promoting leverage trading. Why? Because if you're good at trading, it's so much easier to make so much more money.
Exactly.
I was making, and this is how the videos would look like, I was making $200 to $300 a day doing like spot trading the old way. After finding leverage trading, I'm now making $3,000 to $5,000 a day. And I was kind of decent at trading on spot markets. Spot markets are the ones that don't have that type of risk.
Yeah.
Where you just exchange one thing for another and that's it.
I'm buying this stock in a way.
Yes.
This coin, this asset.
And that's it. Like you're not buying anything hidden beneath it, pretty much. And I was doing fairly well, like not necessarily always profitable, but month into month, long term, it's working out with me. And I've been doing it now from 2017 until 2020. I would say I started early 2018 when I started really trading after like investing enough time researching. And when I say I really put the time and effort in research, I was doing university. I was At the time, everyone was like skipping classes, has like other interests. They want to watch this sports game, they want to do this, they want to do that. And I was like, this is my opportunity, because I think I discovered something that nobody knows about. I'm gonna go to my classes, take notes, pay attention, so that I have to spend minimalistic time outside of university ever studying or doing anything for university. So I go back home, and I'm literally like studying now the second thing, Bitcoin technology. And the only thing that interested me is like it had value and it went up. And I was fascinated by the idea that you can make money off of the internet. And before Bitcoin, I was like, Counter-Strike.
Of course.
Every child played it.
100%.
Especially in the 90s generation. I don't know about kids these days, but anyone born in the 90s pretty much played it. And they have skins for the weapons. So they're pretty much colors that you can have on your knife and then you realize they had value. And before getting into Bitcoin, I was actually trading.
Oh, you're doing the skins trading? Yeah.
And I remember like my initial investment was like $30. And I remember it took me weeks to get to 100. But the idea that I got $30 into $100 trading virtual items on the internet, and these items have real value that I could cash out for money, that idea was just fascinating to me. And again, like the Counter-Strike game as well, it's a multi-billion-dollar economy. And if you would compare it to any NFT that was issued, whether it's CryptoPunks or Bored Ape Yacht Club, the Counter-Strike economy is bigger than all the NFT market combined. And this would have been the perfect idea for an NFT. And now if you want to talk about NFTs, what's an NFT? Like we'll get into that at a later point.
We will.
But yeah, the idea of making money on the internet felt like a hack. It felt like it's illegal. Because I come from a background where you have to see your parents, your uncles, your grandparents, everyone to go out of the home, do hard work.
Like with your hands, you have to earn
hard money. Yes. And that entire concept was just like, okay, like now this is a new world, like now I need to understand it. That's why I was like very invested in it. I was like, okay, now my money tripled. And then Bitcoin continued to go up. I remember when I sold my first Bitcoin for $1,200 to buy the phone, Bitcoin was $5,700, $5,800. And it was, I think, November 2017. And then it continued to go up until it went to 20K. And I was like, okay, if I had left it, it could have reached like $4,000. How high can it go? And this is where the questions begin. And then you start to like slowly, you buy, market goes down, you buy, market goes down. And then you start to kind of try to understand the dynamic of the market. And then few years into it, you realize, like after enough research, that there is like something called cycles, halving. What does the halving mean? How is it important to crypto adoption? How does it affect crypto? Where is the gap? Stablecoins, now it's a new thing. Like what's going on? And slowly I started like getting into it until like lost my money. First time, 2020, January 8th.
Wow, you remember the day?
I remember the day because it was very ironic.
Yeah.
I was at my parents' house and I was trading in the room and I was doing leverage trading. I went to the bathroom, came back, money's gone. Few minutes later, my dad, and I'm still like sitting in front of the screen trying to understand what did I just do. My dad walks in, hey, your grandparents came to visit, come say hi. And I literally had to go and sit with the family. And at that time, it was $20,000 for me. That was like everything. It was $20,000, but it was 126 Ethereum, the value that I traded.
Yeah.
So 126 Ethereum now is like $250,000. And that's like where the story gets like a little bit, you know, I felt it was like devastating at the time. And also it was worth 2.5 Bitcoin as well. And when I had that loss at that time, I was like, how am I ever gonna recover from this? And that was a real big lesson for me, like to learn that, okay, for me, okay, I'm expecting the market to go up, and I'm expecting it to go up very soon. And I just lost it at a peak bottom when Ethereum was like, what, $80? Or even, I think 120 actually, like something like that. And I look back and I'm like, what did I do? You know, Bitcoin was 8,000. I remember it was like 2.55 Bitcoin or 126 ETH. And like looking back and I'm like, if the market now goes up, if Bitcoin goes to like 100K, what do I need to do to get that money back?
Yeah.
Even though like, okay, you can trade, but you can't always like make these types of crazy percentages. And if I can't catch up, I'm going to be devastated. So what did I do? I went back into dollar cost averaging every single month, whatever comes from my income. I was still like doing crypto jobs, chats, Discord servers, doing any type of job that would be like something that I can do, easy for a student to do, because I was a student at the time. And that was like one of the interesting parts, because I lost my money again the same way in August that same year after I reaccumulated 1 Bitcoin. And at that time, Bitcoin was $12,000. And I was like almost going to celebrate that I just made like one entire Bitcoin back. But for some reason, I was still chasing a loss. And I felt that money I lost was like stolen from me.
Yeah.
And the only way to make it back is the same way I lost it. Because now I made the 1 Bitcoin back in my hard-earned money. But somebody, like, the money went somewhere. Because since now we're now talking about this, what is leverage trading?
Yeah.
So that this story like makes a little bit more sense. Why do you lose all your money? Or when you're doing futures or leverage trading? Basically because you're trading with money you do not have.
Yeah.
If you're trading on the normal way, you either buy or sell. You buy something, you sell something. How can you make money on the spot markets? Let's just imagine you're buying something that's worth $10,000. You're buying one of it. It goes up $1,000. Now it's $11,000. Technically you made $1,000. But if you sell 1,000 out of it, you're not going to have one of whatever you bought. Maybe you're going to have 0.91, for example, because you sold a portion of it and you do not have the same portion you initially bought. So how else could you make money is if you sell the entire thing and now you have $11,000 back. Another way to do it is you take out $10,000, your initial investment, and leave $1,000 in, and this is like free money.
Let it ride.
Yes. Or you take the free money out, but if you take the free money out and, for example, spend it, if the price goes back down to what you bought it at, now you have $9,000, for example, instead of having 10, and now you feel like actually that money wasn't free that I took and spent. It was just market volatility. With leverage trading, you're not really buying the asset, you are borrowing money to buy the asset.
You're basically betting.
You are betting on whether the price is going to go up or down.
Exactly.
And the minimum leverage that I know of is
2?
1.5.
Oh, there's 1.5 as well?
Yeah. But I don't think anyone uses the 1.5, but let's go with 2. That's the lowest leverage. What does it mean? You have $10,000. Instead of buying one share of that thing that costs 10,000, you can buy at least 2. And you make the profit on 2. You can buy 10. That's where the that's what they don't, no one was telling you. They were just like, sign up on the exchange.
Yeah.
Here's my affiliate links.
Yeah.
Here is what you do it. And they, they would make Discord servers, join. They give you the calls. They tell you when to buy, when to sell. Regardless whether you buy or sell, as long as you're trading on their code, they're making money. And they were making millions. Anyway, and then pretty much you realize, okay, I used the 2x leverage and it just seemed too safe. What's the 2x leverage? Yeah, it's like too safe, it's like not risky. Not risky enough. What's the 2x leverage?
I have a whole story, and I'll tell you in a second. That's why
To
I'm laughing.
simplify it, you're using double X your initial investment.
Yeah.
But here is the what they don't tell you. If the price moves 50% in the wrong direction, you lose everything. Everything is gone unless you put in extra money and lower your risk. Like there is other ways to deal around with it. I personally had zero risk management. And basically like you start to use 2x leverage and then you realize like to make double the profit, honestly making 10 times the profit sounds much more interesting.
It does.
And that is absolutely insane. Because now we're talking about 10% move in the wrong direction and you lose everything. And in crypto, especially at that, maybe now it doesn't happen with Bitcoin, but with a lot of assets, 10% move in crypto when the market caps were smaller, it would happen over minutes. I remember first time I lost my money, it was on XRP and a 10% move happened. Like it was I would put $20,000 with 10x leverage. So I had a $200,000 position worth of XRP, and my goal was to make 10% on the 200,000.
Yeah.
So that now I can double my money.
Yeah.
Because it only takes 10% to double your money,
Mm-hmm.
but it takes 10% to lose everything.
Exactly.
And within 5 minutes, it went down 10%. I lost everything, and it went back up to where I wanted it to be. And that all happened over a span of 15 minutes. And I honestly thought like the exchange stole money from me. I thought like this is illegal. Like,
something's wrong here.
Yeah, like how did it just go down perfectly just to take my money and then go back up? And I hadn't been liquidated before that. And since I started leverage trading,
That was your first liquidation
yes,
experience?
I was trading for 3 weeks back to back, and I was like making good money every single day, profitable. And I was like, even at that time I was at university, and I was like, I think like I should drop out of university because I'm like so good at this. And that was like my humbling moment. That moment I humbled. Now I was like, okay, you fucked up.
Everyone tells me isn't in crypto, like what I've heard over the years, because I'll give you the context now why is whenever you think like, oh, I figured it out, like when it's trading or whatever, the market will always humble you.
100%.
Whether you like it or not, it will humble you. So I have a similar leverage trading experience. So I FOMO'd into crypto in 2020. Okay. I had heard about Bitcoin, no one cared, but then 2020 is when I think that was like the big bull or the end of the big bull market. So like the hype around it and I had friends that were in it and they're making money, and I'm like, why am I sitting back and all these fucking people are making money around me? I want to make some money. And then so I got in, I learned about like I took a trading course, whatever, and then I discovered the same thing as you, leverage trading. I was trading with very little, not much money, because I didn't want to. I'm like high risk, low, I'm not risking too much, but the return could be, significant. Yeah. So I was maybe putting in like, I don't know, $500, whatever, but I'm trading at like you, literally word for word, the thought process. 2x is like, it's fine. 3 is cool, but like 10's nice. I like 10. 10 sounds great to me. So that's why I resonated with what you said so much, because, and I made this mistake, this leverage trading mistake, multiple times with small money, but it just taught me that like Number one, it showed me, first of all, that experience taught me how greedy we are as people. Because I never thought I was a greedy person. But then when you put yourself in that situation, let's say you're up 20x. If you at that point have not cashed out and you're like, oh, but now like it will go to 30. If you have that thought, it just shows you how greedy you are as a person.
100%.
And it was a very humbling thing. And at the same time, obviously, I was full gambling. Like, it's not like I had stop losses. It's not like I was doing like all wrong. I felt like sorry, please.
It stops being about the technicals, the data. It's just like
it's pure
price
emotion.
go up, price go down. You don't care.
Exactly.
You're like locked in.
That's it.
You want to see the return, and like if I lose it, I lose it.
Exactly.
You stop,
exactly.
and this is the state.
You go into like a gambling mindset. You know, like when you're at the table, you're playing whatever, and you're down like a couple grand. You're like, instead of getting up and like going home, this is not your night. I will stay here and put money until I make it back. And
until I'm break even. And
then
you
minimum.
get to break even.
And then you'll be like, now that we're break even, we should go.
This is the psychology of a gambler.
Thank you very much.
And
exactly.
that is the thing that is happening to 99% of the people.
Yes.
When they are unconscious about it, that they are getting into that mentality.
Exactly.
That is the problem.
Absolutely.
Leverage is gambling.
It is gambling. I think like you said, you can be good at it if you're a good trader. There is a way to do it. 10x I think is absolutely ridiculous but you have to have like a system like stop losses, dollar cost averaging. Like you have to. It's not just like throw it in and see what happens. You have to be doing what you were doing almost every day on spot. Like it takes work. To do it right. To do it right.
So leverage, I would just leave it for experts.
I agree.
So they tell you like 1% of daily traders are profitable, or 1% of traders are profitable. 1% of the top 1% of traders can be good at leverage. These are the people that are emotionally detached from money. They can take a loss and call it a day and move on because they have trades. They see it as a job. They don't see it as, I'm going to try to make as much money as possible, as fast as possible. For example, they have a goal to make 1% per week.
Wow,
they make
only 1% per week.
It's even less.
That's insane. Like that's insane that those are the margins they're going for.
The S&P 500 is doing what? 8 to 12% on average per year.
Average, yeah.
That's like when somebody hears about, especially someone in investing, if you tell them about 10, 12% return per year, that's insane.
They will bite your hand off to take it.
If you say 20% per year, now this is like delusional, like no one is doing 20% per year. So when we're talking about 1% per week, that adds up to like, let's say 50% per year. That is absolutely insane.
That is insane. I didn't think of it like that.
And we're not even talking about the compounding part, because if you want to compound it for 52 weeks, you are at least 100% up. But still, like, it's a bit more complex than that, because a daily trader, a successful one, for example, would either tell you, here is an amount of money that I would like to make. I know people that want to make $10,000 a day. They have a big enough portfolio, and that's all what they need. They're like, at $300,000 a month, I'm okay. You would see one day he's down 25,000. Next day he's up 35. Then he's down 50. Then he's up 80. And then it averages out in one way or another that he's up on average $10,000 a day. He made $300,000. And then some of these people, they're like, on weekends, I'm not trading, so I'm good with $200,000. Usually these are the most successful people that I know that look for a certain amount of money, and they have enough capital to, as a like, okay, 1 week completely went wrong. He can go for 3 years losing $10,000 a day, and he still has money to keep it up or make it all back.
Yeah, yeah.
And they're not chasing losses, so they're not revenge trading. So if he lost today $10,000, he's completely fine. He's going to get off the screen. He's going to go get his coffee, go to the gym, watch a movie, go to the cinema, sit with his kids, with his family, like nothing happened. It's just another day at the job for him.
Yeah, yeah.
Now there's a different type of people, different category of people with extreme conviction and lack of emotional attachment to money. Maybe that emotional attachment to money is absolutely not non-existent. And I know actually a couple of people here in Dubai. One of them is like a close friend of mine. He is the goat of trading. And when I say he is the goat of trading, he is so good, but I couldn't do what he does. Like if he would sit with me and tell me what to do step by step, my heart couldn't handle the things that he does with his patience, with his, like it's okay for him to be down 5 million on a Tuesday, $5 million. That's he's very, very comfortable with that. And he would be like, you don't have to do it that much. You don't have to go that deep. You can be down. If I'm down like 5 million, let's say, you could be down 50,000. But I don't want to be down 50,000. Do you understand? And in my head, I always like try to play. I figured out one way that works for me, and it's the safe long-term way.
Yeah.
What is a safe long-term way? DCA, dollar cost average. You put money in, regardless of the price, as long as the price is lower than something that you would like. For example, as long as Bitcoin is under 75,000, I'll buy every single month with this percentage of my income. Or with this much money. And when it's above this much, I'm going to start slowly selling DCA out.
Yeah.
And this was the easiest, simplest way for me. And that's other than the trading that I do. And the trading that I do is on spot markets. I just exchange one thing for another. And usually it's always against Bitcoin, the old way, like from 2017, 2018. Now, if you ask anyone, what are you trading for? They're going to tell you USDT or USDC, the stable coins. I still trade for Bitcoin pairs because my goal is to make more Bitcoin, even if the market is going down.
Yeah.
Because sometimes, let's say I would put $10,000 on a trade, and that would be worth 0.1 Bitcoin. And then I would close it in a profit at $8,000. How did that happen? Bitcoin went from 100,000 to 75,000. And now, instead of having 0.1 Bitcoin, I have, for example, 0.12 Bitcoin.
Yeah.
So I made 0.2 Bitcoin, or 0.02 Bitcoin profit.
Yeah.
And this is a win for me because I know Bitcoin is going to go up. If it's not now, it's like 4-5 years from now, it's going to be up. So I'm willing to hold it.
Yeah.
And that's the thing. So it's a lot of factors that go into it. But back to leverage. Same thing goes with meme coins. The meme mania that happened, pump fun. People are getting into the mentality of gambling unknowingly.
Yeah.
They may have never went to a casino. They may have never gambled. But any of those people, put them at a casino and they're going to love it. Because it's going to give them the same type of dopamine that they're
rush.
getting. That rush, yes. And it's very dangerous because it's addicting. And the worst possible thing to happen to someone is to win from one of their first investments. Because they're hooked.
Yeah, that's it.
I'm not talking about Bitcoin. I'm lucky it was Bitcoin. If it was something else that I made crazy money on, I think like my dopamine receptors would be baked, would be completely baked, and I would always be looking for that same experience.
You're chasing that dragon.
Rush. Yes. And this is what happens to people. You often see people like, especially people that have absolutely no knowledge, coming into crypto and they're like, I put $1,000 in, made 10,000 within 1 week. Bro, crypto is amazing.
So easy.
The best thing that these people could ever do is cash out and never come back.
Yeah.
What's the percentage of people that do that? You're like, now I know investing. I figured out how to make money. Why do people work? These are like the thoughts that get into your head.
Yeah.
I just turned $1,000 into $10,000 buying a funny coin because I thought it was funny.
Yeah.
And now this is your way to evaluate coins. Like, if it's funny, I'm gonna buy. And then you take $10,000, and you're even on a worse luck if the second one works out too, because now you put 10,000, it's 50,000. Now you want to drop out, you want to quit your job. Like, I'm so rich, like I'm gonna go like curse at my boss at the job, like tell him I don't want to work. If they're at university, they want to drop out. If they're at school, they don't want to study, because now like they're the expert.
Yeah, خلاص, I have the proof, you know.
I made it not only once, twice. And if 3 times,
you're done.
Yeah, if 3 times, the likelihood of someone staying, I think it's higher than like 95%.
Yeah.
That they're always going to bring money back into
the space.
Yes.
Yeah,
yes.
yeah.
Like, that's it.
Yeah. I wanted to, because first of all, an insane story of how you got to like where you are now. And like, I appreciate that you took us through like every stage, because it would be very easy for someone if I met you now, okay?
Yeah.
And I'm like, okay, Yazan is a key opinion leader in the space, whatever. He's been in the space for many years. So the person I'm seeing now is the person after 7 years of all that shit to like get here. So, and he's successful, so it must be very easy. You know? So I appreciate you sharing the stories when you lost everything, when you leverage traded, and when you said leverage trading, I'm another example. I'm a case study of like, I FOMO'd in, this happened to me.
And do you know what's the thing? It's only in 2020. And I swear to God, for some reason, since COVID, I always feel like it was just yesterday.
Because time just like, everything's
like
jumped.
More than 5 years ago.
Yeah, isn't that insane that it was that long ago?
It's absolutely insane.
Yeah.
But it's very recent. Like, I don't feel like we moved on.
Yeah. We're barely waking up now into like this new phase, man. And what you said about, one important thing you said is a lot of people come into this space with no knowledge, just like I did. Okay, I took a trading course. Okay, I was watching, who was I watching every day? Like BitBoy Crypto and like all these like big guys in the space and whatever, like getting the latest news and stuff. The problem is when it got picked up, the way I see it, when it got picked up by mainstream media, which was when the bull market was insane in 2020 and 2021, like it was going crazy. And then, you know, if you reflect on like the last, from 2022, maybe end of 22 till maybe the end of last year, beginning of this year, we were in the bear market, so you weren't hearing anything. And then subhanallah, once the bull market started like coming back, money's in the space, news media's in the space. So now you're bringing all these, the noobs like me, all want to be like, oh, there's money here, let's go find the money. So after that experience I had in 2020 with like the space, I'm like, you know what? Okay, I learned my lesson here. I don't do leverage trading, number one, very, very important. And that's why when a year and a half later, when NFTs entered the space, and everyone was talking about it in the same way, the Bored Apes, the this, the that, and I'm like, fuck you guys, okay? I FOMO'd them before. Fuck NFTs. I don't know what they are. I don't understand what they do. I understand the value. I don't know anything. I've learned my lesson, and at a very small price. I'm not getting back into this space until I feel either I'm going to do it long term, like I'm just buying every month, just buy spot, accumulate very, very long term, or I'm just not going to get into the space. So I only got back into the space when my wife started working in the space, and you know, she was around it, and that's how I've gotten more into the space as well. So I'm like, okay, we should, don't go crazy, but let's invest, but long term. Spot every month, buy a bit here, buy a bit there, bit of this, bit of that, and leave. But like also, the frustrating part is because I can, like, you can, it's not like I check it every day, but like, it's something that you're always like, your mind is always like,
it's calling you. It's like something is whispering.
Exactly.
Check me out.
Yeah. So like, I get the notifications from Binance like, hey, Bitcoin's down today. Hey, ETH is down. And you just look at it, and then you open the app and you're like, oh, you're down. Or maybe you're up, but like you're barely up, and you're like, is it even worth just leaving it there? You know, you have to just have such a long-term view about it. But I wanted to shift the conversation and kind of enter, because I'm very happy we touched on trading. I didn't think we were going to dive into that today. And I want to come back to it. But I wanted to kind of set the stage for the rest of the conversation and kind of give people an insight into this world. So I'm going to throw some terms at you, Okay?
Okay.
These are things that people might hear in the space. These are things, and this is my experience, guys. I emceed a big crypto event, conference last week. And, you know, I was, as the MC, thank God, I don't need technical experience. I just need to look pretty, have some energy, and bring people onto the stage.
Yes.
The experts are there for a reason. So, but I'm just in a lot of these conversations, and people ask me, like, what project are you with? What blockchain are you on? Where are you launching? Are you layer 1, layer 2 on chain? So I'm going to go through the list of words I didn't understand, because I'm sure this will help other people too, and kind of explain what these all mean. But first, before we get into all of those, explain, Yazan, what is a blockchain? Let's start there. I want to start pure basics.
Interesting. So the blockchain is some sort of a concept that is something that's verified in a series. In which way? So when we talk about blockchain, we talk about it's the public blockchain. You know, when we talk about these types of things, it's because it moves in blocks. Again, what does that mean?
Yeah.
This is like very complicated to understand to the normal individual.
Yes.
But again, I'm gonna go to two parts of the explanation.
Sure.
So there is something called mempool space.
Okay.
It's a website, mempool.space.
Okay.
I would recommend anyone that wants to visualize, have an idea of what's going on a blockchain, to open that website up. It's going to show you the Bitcoin blockchain.
Okay.
And it's going to show you that there is a block here and a block here and a block here and a block here. And it's going to show you a lot of blocks. And it's visualized like blocks. And each block has transactions. And it's going to show you the ones that confirmed and the ones that didn't confirm. And once one confirms, it's going to go from one side to the another side. The screen is split in half. One half is the confirmed transactions, and one half is the non-confirmed transactions. And you can visualize it. And the moment a new transaction confirms, you're going to see the blockchain is moving. Now it's prioritizing the very next block.
Okay. And I'm going to be jumping in at points just to ask some questions. So sorry to interrupt. So in the confirmed and unconfirmed now, and we're moving from unconfirmed to confirmed once that's done.
Yes.
Is it unconfirmed because there's an issue with it, or it just hasn't been processed yet to be confirmed?
Here is the fun part. On the Bitcoin blockchain, there is a reward for confirming a new block.
With the hashes, right?
With the hash and the mining power.
Yeah.
And it's very complicated mathematical way.
Yeah.
Has to do with like encryption, like computational power. But for example, at the time being, whoever mines the next block, I believe they get 3.125 Bitcoin. That's the block reward. Plus, this is a big part of it, plus the transaction fees for the people that paid for their transactions in that block. So they take the reward from mining the block, 3 Bitcoin, and there could be 10 Bitcoin worth of fees. It's much lower right now. But for example, I don't want to get into something that's going to more
I know, yeah, let's try to keep it simple, yeah.
So when I send a Bitcoin transaction, Bitcoin, we say it's slow.
Okay.
On average, a transaction takes 9 to 10 minutes to confirm. What does that mean? That means it takes the mining power on average 9 to 10 minutes to mine a new block, to get the solution for a new block. And once you get the solution for that new block, you basically get to verify the transactions that were made during that period in another complicated process. You can say, these are the transactions that go through now, and everything else is going to be delayed for the next block.
Okay.
Or the block after.
Okay.
Depends on the fee. Okay. And the way to prioritize your transaction is to pay higher fee. So if I want my transaction going the very next block, I will just set it at a high enough rate that I would guarantee that it would be in the next block.
And is this what gas fees are?
Gas fees, when we say gas fees, usually we're talking about Ethereum.
Okay.
But it's very similar to that.
Because that's where it sounds similar. Yeah.
It's very, very, very similar. It's a very similar concept, just a completely different environment and a completely different blockchain. And this is what I wanted to tell you.
Okay.
When I said there is going to be another part of blockchain that we're going to talk about.
Yeah.
And this is the part that people should care about. The blocks, no one cares. Like if you ask me, how's that going to help you? How's that going to help you trade? How's that going to help you make investing decisions? You don't care about the blocks, the confirmations. You don't care about none of that because all of that, technically, to the average person, it's meaningless.
Okay.
You can Google, look up, what does a blockchain mean? You're going to read it. You're not going to understand.
Yeah.
I don't understand it.
Yeah.
Do you really need to understand it? You don't really need to.
Yeah.
Now, when we talk about the other part of blockchain, when we mention blockchain, we mean one blockchain that differentiates from the other.
Okay.
Ethereum is a different blockchain than Bitcoin.
So are different blockchains like different in a way like servers? Like the way I imagine it listening to, it's like a VPN network. Am I connecting to Bitcoin or am I connecting to Ethereum? Or
Here is the fun part. It's a completely different environment.
Okay.
So now, like the thing is, it's hard to imagine because it's all connected by the internet.
Yeah.
But they're not connected in any way to one another. Bitcoin has zero connection to Ethereum. If Ethereum disappears, Bitcoin will exist. If Bitcoin disappears, Ethereum will exist. But here is where it gets interesting. Because if we say USDT, for example, you have USDT on an Ethereum wallet, which is, for example, MetaMask. If Ethereum would disappear, your USDT would disappear too, because the USDT is on
that network
on
or
that
blockchain.
Yes.
Blockchain. Okay.
Yes.
Okay.
And this is where it gets interesting because now there is networks.
Oh, okay. All right. Yeah.
Networks technically sometimes can be different blockchain or can be supporting to the main blockchain, and it gets a little bit more complicated.
Yeah.
But as an individual, you need to know like there are different blockchains.
Okay.
Let me name some of them. There is the Bitcoin blockchain, Ethereum, Cardano, XRP, Solana.
Yeah.
These are all completely separate environments, completely different from each other, from one another.
Yeah.
And for example, there are ones that have familiarities. For example, let's say Binance Smart Chain compared to Ethereum. They're both different blockchains. But they both, you would notice on MetaMask, for example, or a ledger wallet, or even an exchange deposit address. When you want to deposit crypto into the exchange, you will see that the same address for Ethereum is the same address as for Binance Smart Chain, because they use something called EVM.
Okay. What's an
Ethereum
EVM?
virtual machine, which is the way of coding for Ethereum. So they took the concept of how Ethereum is made, and as a result, or encryption of Ethereum, and as a result, the public addresses that you share with people are the same, whether it's for Ethereum, for Binance Smart Chain, for Arbitrum, for Optimism, for Polygon, for plenty of others, tens of networks that adopted this format, user format.
So is the EVM basically my Ethereum's conversion mechanism to speak to other blockchains?
It's not really that. It's just the way of coding is going to be the same. So if you want to write a smart contract, what is a smart contract? It's a code that is executed without need of middleman. It's that simple. So when you're interacting with a smart contract, you're interacting with code that will do something without need of a middleman. Best example for smart contracts are decentralized exchanges.
Okay.
I want to exchange my Ethereum to USDT. But I don't want to go to an exchange. because exchange is a mediator technically.
Okay.
But a decentralized exchange is a open environment where I can actually skip the user interface and interact directly with the code. Obviously, we all use the interfaces. We go to the interface, we click a couple of buttons, and then suddenly my Ethereum is exchanged into USDT.
Yeah.
How did that happen? On exchanges, there's someone buying, there's someone selling.
Yes.
But how did this process happen? Well, let's say in a smart contract, you wanted to sell, you wanted to get rid of your USDT, you want to buy ETH. And I want to do the opposite. But we can't interact directly with each other, so we're both trusting the code. You send your USDT to the smart contract, and I send my Ethereum to the smart contract. And I say, this is the price I'm willing to sell for, plus minus 5%. And you do the same thing. Maybe you say, plus minus 3%. If the conditions of me and you are met, the transaction goes through without needing of a middleman. We just trusted code. Now, the other way to do it would be me and you, and for example, we both know your wife, so you would give the money to your wife, and then I would send the Ethereum to your wife, and then she would give me she would hold both assets and then exchange it to others.
Yeah.
Now, some people that are going to be listening to this, they're going to be, look at this, he's moron. That's not really how smart contracts work. That's not how DEXs work. And I know. I know. I'm trying to simplify.
Yeah, he's explaining to the people who like me who don't know this stuff.
Yes.
So this is good.
So yeah, if we want to go deep into it, there's something called liquidity pools. There is liquidities.
We're going to keep it general here.
Yeah. I know enough about that to exploit it because I've done.
Yeah. That's all you need it for. Exactly.
Yeah. So just.
Yeah.
So these are what smart contracts are, and it's something, for example, that Bitcoin blockchain does not support. There are no smart contracts on the Bitcoin network. You can't do this process. There is like no real tokens on the blockchain network. There is some sort of thing going on called runes now. There is ordinals, but I wouldn't want to get into that right now.
Yeah.
It may be bigger in a few years.
Okay.
But I don't think it's really worth the attention as much as Bitcoin is worth to get that attention.
Yeah.
Because it just like, on tech-wise, it's very stupid. Interacting with it is very difficult.
Yeah.
Moving it around is very difficult. Some of it doesn't make any sense. So for the average person, this is not a good place to start.
Okay.
Full stop.
Okay.
So now we understood like what is blockchains.
Yeah, we've got blockchain, we got smart contracts, Ethereum. There are different blockchains that are completely separate. They have nothing to do with each other.
So the blockchains that we said are EVM compatible, which share the same user of, the same address, also share the same coding mechanisms, the same smart contracts could be executed. If your smart contract works on Ethereum, it can work on any other EVM. Okay. Which makes working with EVMs so much easier.
Gotcha.
If a developer integrates Ethereum into their project, that means they can integrate Binance Smart Chain. That means they can integrate Polygon.
So might as well.
So they just add a couple of buttons, copy the code, paste it into different blockchains, and it's the same exact thing.
Got you. So when
you step to Solana, completely different environment.
Oh.
Developers hate the coding mechanism of Solana. Rust, developing in Ethereum, it's a programming language called Solidity.
Okay.
And on Solana, it's Rust, and developers hate Rust. Everyone that I talk to says it's absolutely horrible. But people like trading on it, and there's some people trading, some people making money, people like the ecosystem. Yeah. And that's like where the gap is.
You said, I'm happy you said okay, I have two questions. So so now we've understood a blockchain. We understood that there are different ones. We've talked about smart contracts, and this is how everyone talks to each other and how things, get connected. Now, when they talk about, I hear these things, layer 1, layer 2. I know this is quite technical.
Excellent question. But layer 1, just to make it simple for you, it's the blockchains.
So layer 1, I'm on Bitcoin.
Bitcoin is a layer 1.
Yeah.
Because it's a main blockchain and it's where activity happens on.
Okay.
Ethereum is a layer 1.
Okay.
Binance Smart Chain is a layer 1.
Okay.
Surprisingly, some people think it's layer 2. Why? Because it's similar to Ethereum.
Okay.
Now we're going to get to layer 2s. Again, Cardano, XRP, Solana, all of them layer 1s.
All the big ones.
I
all
mentioned.
Yeah.
Not necessarily big ones, because there are big ones that are layer 2s.
Good point. Okay.
Yeah.
Okay.
So, for example, when we say Arbitrum,
Okay.
when we say Base network, the Coinbase network, it's a layer 2. Now, what does a layer 2 mean?
Exactly.
Very interesting. Because a layer 2 would use the same base currency of a layer 1. So to pay the fees in a layer 2, it could be actually, but it's a bit more complex than that, because Polygon is a layer 2 and you can pay fees in Polygon. But again, in Arbitrum, you can pay the transaction fees in Ethereum, even though it's not the main Ethereum network. And how they work, it's a little bit like more complicated, because they're using some sort of a side chain.
Okay.
It's like you're on the highway and then you go on a side road that drives parallel to the highway. It's a lower speed limit, for example, than the highway, but the highway is full of traffic. It's completely blocked. So you take this alternative road that's going to get you there faster, even though it has lower speed limits. The speed limit is 80 instead of 120.
Okay.
But it's empty. And the highway is fully stacked. Maybe there's an accident, something is going on. So you move out, and then at one point, maybe you get back into the highway.
Okay. That's a good analogy. I get that. That makes sense in my head. Yeah.
So a layer 2 is basically something that is cheaper than layer 1, because the fees might be more optimized, and it takes away some sort of incentivization that happens on layer 1. I'll tell you what do I mean by this. In Ethereum, they went from proof of work to proof of stake.
Yes.
So you have to stake your coins to be able to verify the network and do that type of thing. Do you know what's proof of work and proof of stake?
If I'm not mistaken, proof of work was someone had to physically do like the computations and so on, and stake is I'm putting in my coin as my almost like collateral to be able to verify this transaction.
Pretty accurate.
Okay.
So the proof of work is mining.
Yeah, exactly.
The
the hashes and
the
whatever.
hashes and the calculations, and you are doing effort to be able to verify this information. And by the way, it's just not like when you get a mining rig or whatever, you're not mining on your own. You usually, because it's going to be impossible to mine a Bitcoin block, even though there is a few people that got lucky even throughout the last couple of years where a single miner mined an entire block.
Wow.
It's possible, but it's very difficult.
Yeah.
So what usually people do is they connect devices together and they generate one pool. So you connect to a network, and the network knows what's been the numbers that have been guessed, the numbers that haven't, and then you all start guessing together as a network, and the reward is shared based on the power.
Gotcha.
Whoever has more power gets their share of Bitcoin accordingly when a block is mined.
Yeah.
Proof of stake, you have to put a certain number of Ethereum, for example, to be able to validate transaction and run a node where you can get a return on your investment based on the network transactional fees and so on, based on the total amount staked, similar to the mining pool when all of people are connecting their devices together with Bitcoin, but now it's on Ethereum, and the network shares the activity of whatever is going on.
So layer 2, basically, if I've understood correctly, is so we have like layer 1 is almost like the this ground that we're on right now. Like it's like the foundation, and layer 2 is like I'm building on top of this. So I'm using this.
I wouldn't call it on top.
Or
because
in parallel.
That would be like to add weight, like it doesn't add weight.
Okay.
The whole way is like to open a new path that makes it better for the main network.
Oh, okay.
Because if now you open a parallel street, like just imagine there is a street, like for example, in front of your house that always has traffic, and the government opens a highway parallel to it with 6 lanes. It's not gonna obstruct the main road.
Yeah.
It's gonna make it flow better.
I'm giving you new roads.
Exactly. A new lane.
Okay.
Pretty much.
Okay.
I wouldn't call it even a new lane because it's a kind of a different road.
Sure.
It can operate completely different. But the fact is, when they say it's a layer 2, not a completely independent chain, is because in some sort of way, the information that goes on that blockchain is relayed on the main chain, and they will tell you, we are technically backed by Ethereum.
Okay.
So if our servers go down, all the information we put on the blockchain can be somehow found on the Ethereum blockchain.
Gotcha. Okay.
Let me give you an example. This is again just a hypothetical example to understand.
Yeah.
Ethereum blocks. There's a new block every 12 seconds.
Okay.
For ease of use, let's say every 10 seconds. So there's 6 blocks per minute on Ethereum, on average. That means the highest, let's say, each 10 seconds can contain 100 transactions, full stop. Again, to simplify things.
Mm-hmm.
So the people that pay the highest 100 fees are going to be the first 100 transactions to go through within the 10 second. How does a layer 2 help? When the NFT mania happened, or when there is a meme coin mania, and when there's a lot of people trading and actively using the chain, it matters whose transaction goes first. Because if there's, let's say, a limited supply of 10,000 NFTs or 1,000 NFTs, and there's 1 million people that want to buy it, and only the 100 that pay the highest fee are going to be the first to buy it.
That's where it matters.
And that's where it happens. We used to call it gas wars. I remember me pay, and the gas fee that you pay is money burnt. You are not getting that money back. I remember when Bored Ape Yacht Club launched something called The Other Side. I burned $7,000 trying to buy the NFT, and I didn't succeed at it because I wasn't high enough. I didn't pay enough money for mine to go through.
That's insane.
And at that time, even though I had so much knowledge about blockchain and whatever, I didn't know that if my transaction fails, I'm not getting the money back.
That's insane.
So you are effectively burning money to prioritize your transaction to go through. And who's happy when that's going on? Validators, miners.
Of course.
Because now this network fees
take
are
your time,
spiking.
guys. Yeah.
Do whatever you want. Buy the NFTs. They're happy about it because they're making the money off of fees.
Exactly, yeah.
Now, this is when the idea of layer 2s started like becoming really popular, because they were like, why do you want to pay $2,000 for a transaction fee? Come to Polygon. Come to Arbitrum. Come to this. We optimize the fee. We change the fee system. We don't have to reward validators. We have a completely different concept. So the fees are very low. And how do they operate? Again, a hypothetical example. Let's assume Arbitrum, which is a layer 2, takes transactions done within 10 seconds on the entire network of Arbitrum and sends it as one piece of information to Ethereum.
Wow.
So, for example, within 10 seconds on the entire network of Ethereum, we're having 100 transactions that are going to go through. Arbitrum are always going to pay enough to include themselves in every block. Again, this is a hypothetical example.
Yeah.
All respect, Arbitrum.
Yeah. Guys, he's just using you as an example, that's all.
As a newbie example.
Yeah, for the noob right here, yeah.
So, Arbitrum at the same time, because it has so much lower fees, but maybe, let's just assume it's not busier than Ethereum, but it had 50 transactions. They take the information from 50 transactions, they put it in one package, and they send it to Ethereum, and they are willing to pay whatever fee to be in the top 100 transactions. But now they saved transaction fees for 50 people. It's basically saying, like, instead of driving 25 cars, put all those people in one bus that can have
Everything.
all the people that are in 25 cars.
Mm-mm-mm.
Now you have 25 cars off the road. It's the exactly same concept. It's still gonna take them from this destination to that destination, but it just in a more cost-efficient way.
Yeah.
And keeps the traffic on the main road much less.
Yeah.
And still takes you to the same destination.
So on one side, it's reducing the load on the layer 1 blockchain, and at the same time, it's reducing.
It's cost efficient for the people.
For me as the user
Yes.
too.
Yes.
So I'm gonna come to you and be like, I'll just use your chain.
Actually, the bus analogy is much better than the side road.
Yeah.
Like, it's literally like a bus, pretty
Yeah.
much, getting on the road, on the highway, and it's taking these people, instead of having to, these people would need 25 cars. Now they're getting on a bus. It's cheaper than owning a car. It's cheaper than paying fuel.
Yeah.
I don't know, you're paying 5 dirhams or like whatever it may be.
Mm-hmm.
Maybe it's a subscription. You're getting to your end destination. Maybe faster, maybe slower, depends. But depends on the blockchain, you know, and the layer 2 depends on it and how it operates. Usually faster because the fees are lower and it uses the same coding mechanism. And then the information is somehow still associated with the main network. In this case, the Ethereum blockchain. And if you kind of look into it, I think 90% of layer 2s are for Ethereum. They're built on Ethereum because Ethereum had issues. But the fun part, Ethereum right now is pretty flawless because it's not having that much traffic because everyone jumped on chain. And recently they also pushed an update to optimize the blockchain. And again, it's like kind of tricky because Ethereum is not performing well so far. Like, it's right
like
now
as the token
as a main blockchain and as the top 2, the second biggest cryptocurrency. It's not performing well. It's 1,800. I believe it reached like 4,600, 4,800.
Like 6 months ago. Yeah.
No. This was like last cycle, and it was at 4,000 at one point this time, and it didn't break its all-time high. So people are sitting back. It also underperformed Bitcoin so much that if you held Ethereum in the past 2 years, or if you held Bitcoin instead of Ethereum in the past 2 years, you did 4 times better than. And it's a lot. That's 4 times better.
That's a shitload.
Yes. So let's say you had 25,000 in Ethereum. If you took that money out and put it in Bitcoin, you would have 100K, and you would still have 25,000, maybe 23,000 in Ethereum. And this is only from like a couple of years ago. So it's performing not really well. And I think one of the reasons is layer 2s. Other reason, the NFT caused it to spike up. And I'll be honest with you. I remember I also worked with a company called Virtua. They're based here in Dubai. Now they rebranded to Vanar. I also met them this week. So it was really good to see them. And again, they were launching NFTs on the Cardano blockchain. And I remember I was working with them and I was like some sort of a partnership manager. And I was like meeting with the biggest Ethereum NFT projects at that time and kind of pitching cooperation with them. And somebody, like, I heard it from multiple people, not actually one person. And I even heard the same term on like Twitter Spaces. They were like, any blockchain where you don't have to pay a couple of $1,000s to participate, they're like the peasants blockchain. I was like,
oh wow.
They were like, Ethereum is for the rich.
Wow, okay.
So like, you are with a certain class of people that are willing to burn $2,000 to buy your NFT. And these people are not going to be willing to sell for $2,000 profit. Meanwhile, on Solana, it's like almost free. So if I'm paying like $5 to mint an NFT, If I make $10 profit, they sell. Like, this is how people operate. So we don't want to be part of that ecosystem. And the dynamic changed so much since then. Now it was like the NFT mania. It was mostly on Solana, to be honest. And people want something that's cost efficient, that doesn't cost anything to enter. And they expect to put $15 and believe a millionaire. And they're doing this every day. They're burning hundreds of dollars. And some of them are making money. But the majority is losing money.
That's true.
But you see a lot, the wins are glorified. That's the thing.
That's the thing.
In crypto, the wins are glorified. Like, look, they made it. This guy.
I have the car. I have this, my house, everything.
100%.
Yeah.
And honestly, like recently, people that have been coming to me since November 2024, since 5-6 months ago. Anyone that comes to me in crypto, I tell them, this is not the time to get in. I'm telling them I am exiting the market. I'm slowly exiting the market. It's reaching a peak. And why do I say that? If you're buying Bitcoin, I couldn't care less. Buy it anytime. Anytime is a good time. Whether it's today at all-time highs, or tomorrow, next month, next year, or when it's at 150K. Why? Because I studied it enough and I understood it enough, and it has proven itself through time that 4 years after 4 years, it's always going to be at a higher price. I don't know how long is that going to last for. Again, I don't want to imagine a perfect world with unicorns and rainbows everywhere. But a perfect world for me would be if Bitcoin continues to do what it's doing for 20 years. But again, from my experience with Bitcoin for the past 8 years, I trust it more than anything else. I trust it even more than stablecoins. I would rather have my money held in Bitcoin than stablecoins, because stablecoin is backed by people, and I learned not to trust people from the FTX collapse, the Terra Luna collapse.
Oh yeah, because you're right. Because I didn't clock that until you said it. Like, stablecoins are backed by people. The way I thought of a stablecoin, it's backed by like a company that does some, like, it has a utility, like it does
or
something.
Has dollars.
Yeah.
But what if I remember, because one of the biggest stable coins, USDC.
Yeah, could you explain to us, because this is also an important thing that people need to know about, stablecoin versus meme coin, because after meme we're going to jump into the more of the community stuff.
All right. So stablecoin, it's stablecoins. They're one of the most important part of the cryptocurrency ecosystem.
Okay.
I'll just give it straight as it is. I think if there is importance of the cryptocurrency technology to the actual world and real impact, most of it is happening with stable coins.
Okay.
This is what nobody talks about.
Okay.
Everyone sits and they're like, this coin, I believe in this. XRP is going to change the banking industry. Cardano is going to do this. Bitcoin is going to do that. Bitcoin is going to 1 million. Ethereum, the smart contracts, it's much easier to program than Solana. Solana, it's faster than Ethereum. We do this, we do that. At the end of the day, one of the biggest use cases for cryptocurrencies are stablecoins. How? When someone in Argentina, they see their currency collapsing, they can buy US dollar and hold it in a stable coin and to kind of keep their value. It's very popular in Argentina. It's very popular in Lebanon, stable coins, since their economies collapsed.
That makes a lot of sense though.
Every single economy that you see collapsing, USDT and USDC are a thing. Turkey, it's very popular. People are using Binance, even though they don't care about nothing about cryptocurrency. They just know how to send and transfer money. Everyone has a crypto wallet. Grandmas, 60, 70-year-olds sitting in like a tea shop accepts cryptocurrency. How? Why? What caused them to do that? Because they lost faith in their local currencies. So what's their other option? To buy dollars. Okay, to buy a dollar, it might be complicated to kind of accept dollars as a shop, because you're processing card payments and that's going to your local bank account. What's the solution? Accept dollars. Okay, you're going to take dollars in cash. You have no problems with that. But where are you going to leave your money? How are you going to put your money in? How are you going to accept money from people and tell them, okay, somebody walks in, doesn't have dollars, but you don't want the local currency because it's more volatile than anything else. Like tomorrow it's going to be down 50%, the day after up 25%.
Yeah, and it's something that's going to retain its value.
Exactly.
Yeah.
So I would want to hold dollars. So one of the biggest use cases that you see, again, all across the world, some of the countries, Nigeria, everyone is using stable coins. In Africa, a lot of the countries, USDT is a main currency. People are using it to transfer money. They don't necessarily understand what a blockchain is. They don't necessarily care what Ethereum is, but they just know how to use it enough. You know, they know enough how to send and receive. Here is a QR code. Here is an address. Send me cryptocurrencies, receive cryptocurrencies, and that's pretty much it.
And USDC, what's the difference? What's USDT is the dollar one. USDC
both of them are stable coins.
Okay.
USDT is a stable coin issued by a company called
Tether, yeah.
And USDC is by a company called Circle.
Oh, so it's just...
Which is kind of associated with Coinbase.
Okay.
And I'll tell you what happened with USDC. And this was in the last couple of years. It was like very recent. Basically, Silvergate Bank, when the Silicon Valley bank crisis in the US was happening.
Oh, that wasn't long ago. Yeah.
Within a couple of years.
Yeah, a couple of years ago. Yeah.
And Silvergate Bank, I'm not sure if it's even called Silvergate, but I'm pretty sure it is, went pretty much bankrupt, like went under. And Circle were using Silvergate to store USD that is backing the USDC. Part of it, let's say, at least. So what happens is a moment of panic. Realistically, Circle is big. They're like backed by Coinbase. Maybe they are even Coinbase. Like, I'm not sure exactly what's their relationship together, but I know they have strong ties to Coinbase, and they're like in one way or another, they're associated to one another. USDC is big. But let's assume they have a market cap of 25 billion. And let's say 10 billion is locked. And there is going to be like lawsuits, and by the time they get the money out, it may take 5 to 10 years. And the money, let's assume that they are going to get the money in 5 to 10 years. If they go through with lawsuits and everything works out. And the fun part is that Silvergate, the funds are insured up to $250,000. So if you're a founder of a company and you put $10 million in the bank, technically the bank is only guaranteeing you, in a case of a crisis, you would only get $250,000 back, even if you have $1 billion.
Wow.
So you have lost money now. And now you compare the reserves. Let's say if they have 5 out of 25 billion kind of lost, what's the value of their USDC? Now it's 80% backed, not 100% backed.
That's true, actually, yeah.
So if anyone wants to convert the USDC into fiat,
you're losing like 20%.
You can actually do that, but whoever does it the fastest gets out the fastest. And then there is going to be 5 billion that no one can cash out because there's not enough backing.
Yeah.
So what happened is that, again, panic happens, and rightfully so. Because you see that the coin that I'm holding, that I think is US dollar backed, is actually not US dollar backed. But they, for example, 25% is invested in 10-year bonds that are returning on average 4% per year for Circle, which is the issuer of USDC. Here is 5 billion that we're not going to see for another 10 years. Another 5 years are invested in whatever locked for 5 years. So they actually have 5 billion liquid that they can give out in withdrawals. And now the 5 billion are gone. let me get out of this stable coin because it doesn't seem really stable.
Yeah.
It's the same thing as what happens to banks, a bank run. If everyone, right now, go to any bank, if all the customer go and withdraw all their funds, bank is going to shut down.
Yeah. They don't have the liquidity to give everyone
100%.
that. Yeah.
Because they have the liquidity, but it's given out in loans.
Exactly.
And they're expecting to have it all back in 30 years. But even in 30 years, they're going to have given even more loans. And it's a very big circle where the money is circulating.
Yeah.
And again, why I say I don't even trust stable coins enough, because there's again people behind them, managing the funds, the backing, and it's never like one-to-one US dollar because they have other activities.
Yeah.
It's kind of dumb to have, for example, USDT. I don't know, the market cap is probably 100 billion or around that range. It's probably dumb to have 100 billion of fiat sitting with you without doing anything. Because there are kind of safe ways to invest when you're investing in government bonds that are guaranteeing you a 3% return. 3% return is 3 billion a year. So it's smarter to do that thing with the money.
Yeah.
And again, that is, we saw USDC got depegged. It went from $1 to 85 cents. And my client was exposed. He had $6 million exposure. And it was going down. And I was like, okay, we know Coinbase is behind it. We know it's big. But is it big enough? How much are we willing to risk? Because if it goes to 20 cents, it's not going to be fun. If it goes to 50 cents, it's not going to be fun. And we eventually, he told me, do whatever you think is the right thing to do. And if it was my money, I would have left it in hopes of Coinbase would bail them out. Like Coinbase is one of the biggest exchanges. But I had to take a loss, and I closed it at 96.5 cents.
It's not bad.
So it went down and it started going back up. It was positive news, but confidence still was not 100%.
Yeah.
I was like, honestly, I'm willing to lose that 3.5%.
That's okay. I'll take that loss.
We will take that loss happily. And again, it's how much 3.5%? We're talking about 180.
Yeah.
$200,000. It's a big loss.
It is.
Over nothing, over holding a stable coin.
Exactly, yeah.
Imagine you have 6 million in the bank, 200K disappear just because they tell you, we didn't have enough, so we just took your money.
Sorry, yeah.
And no one is going to recover that loss for you. And then, anyway.
Yeah. So we've talked about stable.
Yes.
What about, so stable, they're like the things like Tether, USDC. So is Bitcoin and all the biggest cryptocurrencies, are they considered also stable coins, or stable coins are just those conversion
only
things?
the backed, USD.
Okay.
Yeah.
Very clear.
And but there's again another stable coin that was called UST, which was associated with Terra Luna, the company that went down. And their stable coin went from $1 to 0.
It's gone.
Yeah, gone. Because the way it worked was just kind of a different way. It was algorithmic backing. Anyway, it failed at one point of time and it went to 0. So I have a friend actually here that had $8 million staked in UST, earning 5% yearly yield on it. And it was pretty much all money to his name. He was like, I'm retired, making $400,000 a year from $8 million locked. He genuinely retired. And it got exploited. And his money was locked for a year. So he couldn't even withdraw while he was seeing it crash.
Wow. Like your house is burning and you can't do anything about it.
You can't do anything about it.
Wow.
So these are what's considered stable coins. There's Euro stable coins. There's probably Chinese stable coins, Japanese yen, Chinese.
They're coming.
Yeah.
Yeah.
There is some. There's
Yeah,
already
there's some,
that
yeah.
Anyone can issue a stable coin.
Yeah, yeah,
Like
yeah.
right now, I can do a stable coin for Jordan. I don't think Jordanian government would be happy about it. But if I make some sort of a system
Yeah.
to make a coin that's 1-to-1 convertible to the Jordanian dinar,
Yeah.
people are going to be able to use it.
Mhm.
They're working on a dirham stable coin.
Yeah, yeah.
right
They
now
just
with
announced
Tether.
it. Yeah,
Yes.
yeah.
Tether, for example, Tether get a lot of criticism, but I love how they operate. Do you know why they were like being really heavily criticized? Because back when they first started, they started, issuing stablecoin, and they were doing part of their backing in Bitcoin, and Bitcoin price was going up. So when the Bitcoin price goes up, now technically they have more valuation than the USDT they have in circulating supply.
Yeah.
So what do? They print more USDT because now their portfolio is growing.
Yeah.
And they put that USDT into Bitcoin. And Bitcoin goes up. And they print more USDT.
It's like a self-serving thing.
And people were like, oh my God, it's like an infinite money glitch. What if people start selling USDT? Or what if Bitcoin crashes? Are they going to be backed 1-to-1?
Yeah.
Because the money they're using to buy Bitcoin with their USDT is USDT going to people.
Mm-mm.
If they're printing USDT and they're buying my Bitcoin, I'm getting USDT in exchange.
Yeah.
So what if I decide to cash out that USDT? Do they have the backing? And they have to sell Bitcoin, but Bitcoin is down half price.
Yeah, you don't have that liquid.
The backing is going to go away.
Of course, yeah, of course. That's actually very
So
true.
they got away with it a couple of years, and then they announced they now lowered their Bitcoin backing, and they have like 80% fiat and 20% bonds and this much, and they're over collateralized. But they never shared their books. They never shared what exactly are they doing. But it's one of the most profitable companies in crypto.
In the space. Yeah,
Every quarter, their profit is in billions. I think they're more profitable than Binance, Coinbase, like the biggest exchanges. It's one of the most profitable businesses in the industry. They don't share their books. They have been like de-pigged a couple of times, but it was very quick.
Yeah.
And it's mostly on like illiquid exchanges. They have a system. You can buy USDT from them. They take 0.25% fee, and you can sell to them. You can cash out through them. You go to them. Hey, I have $1 million worth of USDT. They take 0.25%, and your way. And this is one of their ways how they make money.
Plus, it's a smart way.
The investments. They invest in like long-term bonds. Whatever, and I'm pretty sure they still have Bitcoin. They have like some sort of a Bitcoin portfolio, but that's about it.
Yeah.
These are the stable coins.
That's
so now they're working to make a dirham stable coin, and it's most likely going to be something backed.
So stablecoin is basically a coin that is backed by a third, like something else, basically.
Yes,
so like it's almost like it's backed by a company, but it's almost like you're a bank in a way.
Oh, exactly.
You know what I'm saying?
Exactly.
Yeah.
That's exactly how I view
Fintech.
them.
Okay, I get you.
Circle.
Yeah.
Tether.
Exactly.
I
You're a
see
bank,
them
basically.
as a bank.
Yeah, exactly.
They are a bank. They're doing the same thing.
Gotcha.
Could they be doing money in loans? They're exactly doing the same thing.
Exactly.
And personally, I don't trust banks.
Okay. Fair.
So that's why I don't have that much trust in stable coins either.
Okay.
So if you ask me, would you leave your money in for 3 years or 2 years in USDT or Bitcoin? Every single day, I'll choose Bitcoin.
Yeah.
I just know it's like you can't fuck with Bitcoin.
Yeah.
It matured to that level.
Exactly.
We're talking about now one of the 10 biggest assets in the world. Like even if you compare companies, it flipped Google recently. So you're talking. I think it's even top 5 as we speak right now. Like top 5 global asset, and I think it's gonna get to the second spot within this year, maybe early next year, to be just after gold.
Yeah.
We're talking about something insane. And then we have everything else. So this is like the categories.
Yeah, exactly.
Bitcoin.
Yeah.
stable coins, and
And then,
others.
yeah, and others. Yeah,
Yes.
exactly.
The ones that I would like kind of look at and consider that they will be living are blockchains that
Yeah.
support stable coins.
Okay.
Because when an issuer wants to support a network, they want to make sure there's enough traffic, it's convenient, it's easy to use. So again, we're talking about the most popular ones.
Exactly, yeah.
We're talking about Ethereum, Solana, Tron, and a few other blockchains, but these are now the most used ones.
Yeah.
Tron is one of the most popular blockchains for USDT
Okay.
because it's very cheap, and usually the transaction fees on exchanges when you want to withdraw or deposit, or someone wants to send you money, it's usually like $1. So
it's
everyone is comfortable with transferring
with
it.
that thing.
Yes.
On the so you mentioned something earlier, Yazan, sorry to interrupt you by the way, that you talked about community. Now I know, being like I'm from as an outsider, I have heard and attended conferences and speaking to people the importance of community, especially when it comes to not just meme coins, which is basically a meme coin is basically just a community with like a token as a representation of it. And there's others that are like backed by like companies and have utility and like all that kind of stuff. Like community is also important to them as well. Now, the interesting thing is like, because I know you were a community manager at Virtua, you were there at Cointelegraph, at Waxman, and then and Twitter and Discord are the most popular crypto platforms, which is where you've built your audience. So, I'm curious now. It's such a weird thing in my head. I don't know why, because crypto in mine is such a technical industry where there's a lot of like information you need to know, but there's such a strong community element to it as well, or such an important community element to it that I'm like, in my mind, to be so for community to be so highly valued, I wouldn't align community and the crypto space. In Khalid's brain, it shouldn't fit, but the reality is, they need each other. They're like one and the same. So could you tell me, from your experience, like how important is the community for the success of crypto?
Like an amazing question. This is an excellent question. I'll tell you what I learned. Like again, I'm gonna go through my journey. 2017 up until 2021. Since I started. Reading white papers, reading about technologies, reading about what is going on here, what's going on there, who are the founders, what's their background, going on their LinkedIn profiles, scrolling through their profiles, seeing what they do they have sufficient experience to lead this project before I make a decision to invest or not. Working with the industry itself and working with dozens of clients through Cointelegraph and Waxman, and seeing those companies from the inside out, I realized that a lot of these names that we see as CEO, CTO, whatever, are just titles. And they're like this ex-Google cloud engineer. He was like a director in Google or like whatever. And they just put them in the company and they pay them a salary just to have the name, so that they can get investors in. To increase investor confidence. But the project is absolutely useless. And the funny part is some founders are very transparent about it. When you're like working for them as a consultant or like trying to help them, they're like, hey bro, like I don't expect this project to like live longer than 6 months. I'm just expecting to make 20 millions of it. We partnered with this, we partnered with that, celebrity. We paid them this much. We paid this guy $500,000 to make us a song, and we are gonna do this, and we are gonna do that, and we're gonna spend this much on marketing. We're expecting to make $10 to $20 million, and after that, I'm like moving on to the next thing. And why are you doing this? People want something like this in the market. The market is lacking something like this. And there's white papers, there is everything, and then they do exactly what they told you that they're gonna be doing. So working in the industry, I started to become very fearful of white papers. And working as a community manager, you work on developing their communities. And I was like very successful at working with projects and, knowing how to get to the audience. And at a certain point of time, I was intentionally not doing my best job when I feel that the client is shady. I don't want them to have a successful community.
Sure.
But the client, I'm not directly working for the client, so I can't technically quit, at the same time, I'm, for example, working for Cointelegraph, and Cointelegraph is working for the client, and the client is like unhappy about the community progress. And I'm like, your project is shit. Like, what are you expecting?
Yeah.
What are you expecting? And then I would tell them like what to do. But I know they can't do that. I'm like, you are going to need to do like weekly calls with your community. Show up on Discord and have like 2-hour weekly conversations with your community. Open mic, anyone can come up and ask questions. No, we cannot do that. Can't you do that? And then I would tell, for example, charge them extra like $25,000 if they want to do that.
Yeah.
And then basically the client then would say, okay, we're not willing to pay that much, but they're not willing to do that either. So, and then I tell them, if you want to have a successful community, you are going to need to do that. And usually someone that's doing something shady doesn't want to be sitting in front of a community, involved with the community, showing their faces, speaking with these people, because someone is going to believe them. And someone is going to come for them.
Yeah. Someone's going to ask you questions that you might not have
Yes.
answers for.
So every single time I worked with a community, with a project, and they were not willing to do anything for the community themselves,
That was the first red flag.
the projects didn't go anywhere. And it was always like something shady. And the ones that were always present and wanted to communicate and wanted to be there and wanted to be like, hey guys, it's not about the price of a coin. It's not about the price of an NFT. We're actually doing this. This is the vision. We told you from the beginning, it may not go like to billions market cap. We may not succeed in terms of price, but we're here, we're working on a vision, and we're improving day by day, and we're going to continue on that journey. Price is going to fluctuate. Emotions will too.
Yeah, for sure. Absolutely.
But this is very, very rare to find. And you often see that usually once projects mature to a certain point of time, they stop getting questioned. Like, is anyone really questioning Vitalik? What is he doing with Ethereum? The man did what he had to do. He pushed a product that's almost ready. And now it's like the Ethereum Foundation and the public is developing the network.
Yeah.
It stopped being his core, like, entire responsibility. There is a working blockchain. What is he supposed to do with the price? What can he possibly do? The price is just the sentiment of what people feel.
Yeah.
Do we think Nvidia, for example, or Apple, their stocks are valued like that much, or like they should be worth that much money? They're overvalued 100%.
Yeah.
Apple is not worth like $3 trillion. How much revenue do they make per year to be worth $3 trillion? Regardless, like, of even if they make, like, I don't think they make $500 million. No, I don't think they make 500 billion,
yeah.
$500 billion a year, or like 100 billion. Like, they make numbers, but they're stable. They're continuously improving, so people are willing to put the money behind it. That's the kind of where the valuations come from. And when we talk about projects, again, 2017 to 21, 22, I was like, technicals, this doesn't make any sense. I'm not going to put money in a joke. Like Dogecoin, I would never touch it. But then I saw people outperform me. Buying Doge, not even early. I considered it late when it was at 5 cents. And it went to like 68, 69 cents, 70 cents, 72 cents. And I was like, okay, now I'm investing in like different things. Dozen of other projects, Cardano, Algorand, Telcoin, Verge, like a bunch of other coins that all have the white papers, different kinds of technologies, different types of teams. And I just got outperformed like within a couple of weeks by people that bought a joke, Dogecoin, and it just went up absolutely crazy. And I'm just watching from the sidelines as my portfolio goes lower and lower while everything else is pumping.
Yeah.
And this is when I started to kind of detach from white papers. I genuinely stopped reading white papers. Whenever like a project tells me read the white paper, I don't care about your white paper. What other analytics do you have? Because I know this white paper is your marketing to the public.
Mm-hmm.
It's you're trying to convince the person that doesn't know anything about crypto a bunch of words that they don't understand to think that you are so advanced technologically.
Yeah.
And that it's worth investing in. Because everyone wants to think they're investing in the next Amazon. Everyone wants to think
Don't
they're
we all?
investing
Who
in
wouldn't?
the next
Yeah,
Apple.
of course.
Everyone wants to think they're investing in the next Dogecoin, the next whatever, like multi-billion-dollar market cap, and they want to think they are the earliest. And this is the biggest problem of crypto. Genuinely, it is the biggest problem of crypto. If someone wants to build something useful, it's just such a high barrier to break through into the market. Either you're going to really need funding, which makes them go to who? VCs. And VCs are leeches. Excuse me, like, sorry to say that. Like, I'm trying to do the same thing. But they are leeches. They want to make sure they're buying at a really good price.
Of course.
And they always want to get out at profit.
Of course.
And they pressure the team so much. But then what happens is that you see coins launch, they go up, and then they go down, and they never go back up again. Because VC pumped the money into it. Usually what they do is they invest at an early stage. At launch, they start pumping money into the coin just to make people think,
oh, this is going.
Oh my God, even though it's actually great technology. And there is actually people that want to build something useful. But then the price starts going up and they put even more money and the price goes even higher up. And now people think, okay, this is actually the next Solana. This is going to go crazy. This is multi-billion-dollar market cap thing.
Yeah.
And you see project launching it. The VC buys it at like $10 million valuation. It launches at 50. It goes to 250. Now it's at 500. VC sells what they invested. The $1 million they invested at 10 million and the extra they invested, they get $60 million out of it.
Wow.
And gradually, and the prices go down, and then you realize now the project is at $10 million market cap. And all the people that end up holding are people that bought it between 100 million to 500 million market cap. So at least you're down 50%.
Yeah.
And now you're sitting looking at founders that are actually building something useful, but your money is down, and you end up with a community that is 99% of them is frustrated with you. They're like, do something, make the price go up. When are you going to work on the partnership? And the team sold enough tokens to fund themselves to operate for a year or two, but they don't have that type of money. They would have been able to do everything they wanted if they sold a good portion at 500 million market cap, or if they got more funding than just what VCs bought at 10 and 20 and 50 million market cap. And the unfortunate part is that 2020, 2021, even 2018, 2017, people were throwing money at new projects.
Yeah.
And 99% were becoming bad actors. What does that mean? Like, I talk to some of them. They're like, people are throwing money anyway. They know it's risky. They know they're probably going to lose money. There's this guy that says he's doing an AI project. He just raised $50 million at $250 million valuation. This is money for his pocket. He's going to give them a cryptocurrency as the return of their investment. He doesn't have to give stocks. He doesn't have to give ownership of the company. And then company goes bankrupt and life goes on. Might as well do the same thing. I know a thing or two about AI. I use ChatGPT. This is genuinely what people are doing.
Yeah. Yeah.
And I'm telling you, I completely lost faith in the industry that I became a Bitcoin maxi at one point of time. I was like Bitcoin only. I don't trust nobody. Not even the ones like I'm working with. Like I really don't trust them. I have lack of trust. And this is why newcomers to crypto, I tell them, stay away right now. This is not the time to get in. Unless you're buying Bitcoin. Anytime is a good time. Again, this is like not financial advice. But
Yeah.
it's, if you want to like slowly get in, this is the best way to get in. Otherwise, you're gambling. If it's not Bitcoin, you're gambling. If it's not Bitcoin or stablecoins, even stablecoins, you're gambling.
Fair.
And the thing is, usually people go through my 8-year journey. The same thing. It's the same story over and over and over again. People get in Bitcoin. Well, it's boring. It's already at like $100,000. How much higher could it possibly go?
Yeah.
To 120. Might as well leave my money in the S&P 500. Probably a good decision.
It's a safe decision.
It's a very safe decision, yes. And then you look at other things. They start to look at white papers, different projects. What is this? What is that? This is faster. Let's buy XRP. Let's buy Ethereum. Let's buy Solana. And then long term, you either get lucky or not. And you start pretty much gambling.
Yeah.
Even if you're buying the bigger ones, it's gambling just with different risk tolerance. Because I think even if you're buying Ethereum, you're gambling personally. And people call me crazy for it. And I have like a circle of a few friends that I usually like talk to. And it's so funny because we all have like different opinions and we all agree on Bitcoin.
Okay, that's
One
the
of
unifier.
them really likes Solana.
Yeah.
And one of them really likes Ethereum. And I like Dogecoin. And we always like get into arguments. I like start joking about them why I don't like Ethereum and Solana.
Yeah,
They start joking with me why like they think like I'm stupid, why I think they're stupid. And we all are united by Bitcoin. And this is the kind of groups I like to be a part of is when I see people with crazy conviction towards certain things and they've spent at least as much time as I have spent. So they have their story and they have their own experience and there's not going to be two people holding the same two coins and having the same opinions. And this is like another thing. If you feel like you're the smartest person in the room, you should leave the room. Like,
yeah, by the way, yeah, 100%.
Because you're not gaining anything.
True.
And I always like ever since I quit mechanical engineering, I love challenges. I love to be in a challenging environment.
Yeah.
With crypto, it's a very challenging environment. And people will tell you it's different every time, but it's the same every time in being different every time. We talk about the cycles. This is one of the most important terms to know.
Yeah.
The cycle. What is a new cycle? We're like 1 year into this cycle. What does it mean?
Yeah.
It's after each Bitcoin halving.
Yeah.
On average, every 4 years, a new Bitcoin halving happens. And that's when we say a new cycle has started.
Yeah. That's when things get crazy.
Shift.
Yeah.
Things are going to go crazy.
Yeah.
But the thing that's always the same is that every cycle is different from the previous one.
Yeah.
And that's for sure.
Yeah.
No two cycles have been the same so far. We see similar behaviors, bull markets and bear markets. They don't happen after the same period of a Bitcoin halving. The periods are different. The multiples are different. The altcoins act differently, and that's what we know for sure. But what we know, like what I know from my experience, is that 4 years after 4 years, the price is always higher.
Yeah.
Which is the good thing.
So you were saying how I appreciate how you talked about the community aspect because you've run them before and the things to consider.
I
Sorry.
actually didn't get much into it, but what I wanted to say is that the community, you're talking usually investors.
Oh, so when we speak of when I hear community in crypto, it's not like
Who's
Khaled.
the-
Or
what-
like, well, yeah, me. I'm an investor in your
Listen,
project.
what's my interest to
Yeah.
talk about Dogecoin every day if I'm not invested in it?
True. Fair.
Okay, now let's say I'm a community member and I talk about Dogecoin every single day on Twitter or like Instagram or whatever. Participate with Twitter spaces, talk about Dogecoin, but I don't hold any of it. I'm technically a community member, but do I feel like I truly belong like everyone else that's invested in it
No.
and has financial interest? This is what like kind of changes to see, like if you really want to see someone that's involved in a project, how much money do you have in the game? Like somebody comes to you and they're like, yeah, you know, like I like this meme and like whatever they just mention it. I'm like, I'm really deeply into it and whatever. Are you? Or are you just using it for audience? Because it is a thing. There is leeches, especially content creators that are big to a certain level and they start seeing a coin trending and they're getting none of that attention. And now new people are getting popular because of these coins, but they're not getting popular. Might as well start talking about it.
Okay.
To get that community to follow me.
Okay.
To come to watch my videos, to listen to me.
As a content creator yourself, and like in the crypto space, and you've built a following now on Twitter, and so you've in a way built your own community. But what I really appreciated about you when we spoke at CPC was because I was asking you, I'm like, are you with your audience, with your community? I'm sure you get a lot of requests to be part of projects and to promote coins and whatever, which we discussed, and why you don't do that. It would be very easy. It'd be very tempting to just go and be like, yeah, because it's like free money. But I believe if you look long term in the crypto space, the fact that you say no to most and are not interested in promoting coins that either you're not fully invested in or like you have dotted the I's, crossed the T's, done their research in. So I feel like you have a sense what has made you successful and what will continue to make you successful is the credibility that you've built in the space. Because I'm not here to like,
100%.
I'm not here to be like, yeah, buy this, whatever.
I think you only get one reputation. I've seen the rise and downfall of too many people before I myself got exposed to it.
Exactly, yeah.
So from the beginning, I was like very, very, very conservative with people. I remember, bro, like when I started, again, I thank my community, Pepe, for getting that audience. Most of it is from that coin, the Pepe community. And I had so much experience with working with communities and building communities that I could manipulate people. And how I decided to use the audience when I first started speaking to people is to tell them how we manipulate them.
I'm telling you, this is what we do.
I'm telling you, this is the playbook. I'm telling them, do you want me to play with your emotions and make you put your money? Because I can talk like that and make you do that.
Yeah.
I can play with your emotions. Like, it's very dangerous and deceptive to do that.
Yeah.
And the thing is, it becomes so obvious to you when other people are doing that and you know like how that works.
Mm-hmm.
And that's why like influencers always like beef with one another and they like get into arguments because they all know what they're doing.
Everyone knows, yeah.
And I was like, okay, I don't really want to go down that path. But I have a really good thesis about Pepe. At that time, NFTs were just like absolute frustration in the NFT market. And I tried to trade NFTs for a year. And even though I had success in trading spot, I was just not good at NFT trading. I would see everyone around me making money. I'm not making money on NFT trading, even though I got involved from the beginning and was like doing things. It just did not work for me.
Yeah.
And at one point, I accepted it and I gave up on it. I said, let me focus at what I'm good at, what makes me money. I know how to trade spot to Bitcoin pairs. That's it. And then Pepe shows up and I see a Twitter space and I was like, Pepe, Pepe, like, I use the meme on Discord, like everywhere.
Yeah,
And
yeah.
I've seen like thousands of Pepe coins. This is not the first one. That's the other thing. Anyone can launch a coin called Pepe with the same picture.
Yeah, yeah.
There could be billions of them. And there was plenty of them years before. But I was like, this seems like it's the right time, because I was like getting involved in spaces, listening to people. And it was like a few weeks, because I was again working at that time with Cointelegraph, I believe. Or was it Waxman? I'm not sure. It was one of the two. And I was like, I'm getting involved with the clients, and I'm like kind of listening to spaces, because I host spaces on my own. I want to like know how to do better like on spaces. And I was just like for months hearing just absolute frustration. And I remember there was like DeFi summer meme, like some sort of a meme coin mania with Shiba Inu.
Yeah,
the
Shiba,
cycle
yeah, of
for
course.
it. And now I was starting to see, I saw Pepe, and it was like the first meme coin I hear of for a year. And it was like kind of like a big news to me. And I got in early. And I was like speaking to the people, and people were coming along. People don't know how to buy it. Most of them were NFT audiences. They only know how to trade NFTs. And I was like, holy shit. All of the frustration that's coming from NFTs, we're talking about thousands of NFT collections, tens of thousands of people, if not like hundreds of thousands of people. I wouldn't say millions, even though maybe millions of people bought NFTs, but not were active on daily basis. So I would say tens of thousands of people that were active on daily basis, trading, flipping NFTs, were looking towards this thing that's getting the most attention right now, and everyone wants to know how to buy it. And I got on spaces and I told them, I'm seeing a narrative shift. I identify what you guys are doing. I see a community forming. You know what I'm going to do? I'm going to start hosting spaces every single day for as long as I can. And for 2 weeks straight, or actually 3 weeks straight, a community developed. And I got in, like it was at like, I don't know, 15 million market cap. And people got in the day before, like at 5 million. The next day after I got in, it was like at 75 million market cap. Then it's 150. Then 250 went down to 100. Within 19 days, it was at 1 billion market cap, listed at Binance. Throughout the 3 weeks, I made pretty much a team. We hosted spaces 24/7 on Twitter. So I would, for example, wake up at 8, or actually I was waking up at 5 a.m. at that time. From 5:30 a.m. until like 4 to 7 p.m. I'm on Twitter spaces, hosting with guests and guests speaking. And there's like few people that come. One of them became like the Twitter Spaces DJ, comes, plays music every like
Sick.
5-10 minutes, and it's pretty much a radio show.
Yeah.
And there's people speaking all the time, and there's co-hosts, and sometimes we leave the space open and we leave like co-hosts, and the host goes to sleep, and there's people to manage the space. Genuinely, 3 weeks, 24/7. There's a lot of people that contributed to this. It's not only me, but this was a power of community, and this was, you could see it, how the impact, how big it was, because the spaces were averaging, like each space would average 1,000 live audience at all times.
Also, that's very good, by the way.
It's insane.
Live
It's
is insane. Yeah,
It's
live is insane.
And people were like blowing up. Their accounts getting bigger, accounts growing, audiences, insight, analysis. And this is what contributed to a time of desperation, and then you have light at the end of the tunnel. And it was very natural for people to see, actually, this is the next brightest thing.
Yeah.
Frustration with NFTs. And that was the beginning of the meme mania. And NFTs have been dead ever since.
Yeah.
No one is talking about NFTs.
That's true. You don't hear about them.
2023.
Yeah, you don't hear about them
April
anymore.
2023 was the end of NFTs.
Yeah.
There wasn't a single NFT connection other than Pudgy Penguins that did well for a period of time after April 2023.
Yeah.
Everything pretty much died.
Yeah. It's really again, this is why the hype is such a significant, it's like the invisible hand in this whole industry,
100%.
It manipulates things, it controls things, it gets us to this point. My biggest frustration with the industry has always been, because I hear it from from Lana, is they'll be like, oh, when the market's good, their clients speak a certain way. When the market's bad, we want to reduce, we want to take out. So I'm like,
it's so tough, man. Because I worked in the same industry.
Yeah, because I'm like, but you can't be so, like, I know, like, everyone, like, there are lots of companies in the stock market, right? And yes, based on your stock price, you might adjust things, whatever. But I feel in the Web3 and crypto space, because I just wanted to round off our conversation on this point specifically, is it's still, I don't think we will get, let's say the last 10 years have been phase 1. And now we're about to enter phase 2. This is the time to, in a way, the way I see it is like grow up. The market price cannot dictate how I run my it shouldn't dictate how I continue to run my business. It doesn't make sense.
What's the problem, Khalid?
Yeah, tell me. Yeah, because this is something I've been like.
The biggest problem on earth right now for the cryptocurrency industry is that everyone that wants to make a project makes a coin. 99% of the crypto projects that exist today do not need a coin. Great, you have some AI tech or like whatever platform that could integrate cryptocurrencies. Don't use a cryptocurrency, make a subscription model. Let people pay for the service. If you have a service that's good enough, they don't need to hold a coin. But it just became trending. Like anyone, the thing is also people like the VCs are pushing you to make a coin. They're not going to invest in your crypto startup if you're not having a coin. Yes, because they want quick money. It's free money.
True, yeah.
Khalid, it's free money for them.
Yeah.
Because these people buying the coins have no ownership of the company.
Yeah.
You own Solana. Do you own anything of the company Solana?
Nope.
Can you change decisions regardless of how much Solana do you own? No. You can't go to the CEO of Solana and say, I don't like what you guys are doing. Because you don't own a stock of the company.
Exactly, yeah.
It's like saying, I don't know, like for example, does the price of BNB, which is the Binance
yeah,
dictate what is Binance doing? If you own so many of it, can you go to Binance and tell them, I want you to remove this coin from your exchange? No, because you don't own stocks. You don't own power of Binance. You're not an owner of Binance. But if you owned a 20% share of Binance, you can actually...
I can say something.
You have voice.
Yeah, voting power.
Yes,
yeah.
Voting power.
Yeah.
Depends on the shares, but regardless, your opinion will matter, because if you say, I will sell my stocks, that's going to have impact on the company, and they may be like, hey, relax, you own 20% of the company. We don't you want to get into that. That's going to be bad for our... Why do you want to get out? Like they would work on it. But if you own all the supply of BNB, no one cares. BNB, like, again, I'm not just like talking badly about anything. Yeah. It's working out for them. It's doing great. And they're trying to make a use case off of the exchange for it. They do like something called quarterly burns. Whatever amount of money they make in profits every quarter, they burn a part of they buy back pretty much BNB, or they burn a portion of the supply. So it helps keep the price high as long as the exchange is performing well. And it's nice to make kind of use cases for coins, but there's millions of cryptocurrencies now. And when I'm saying millions, I'm not exaggerating.
Yeah.
Absolutely no use case. No benefit whatsoever. If you ask me, what about Dogecoin? I said I like Dogecoin. What's the use of Dogecoin? Nothing. It's absolutely nothing. It's just the value of community. The value of, like, what's the value of Bitcoin? This is where people compare Bitcoin to gold, and they're like, gold, at least you can make jewelry. You can include gold in like microchips and like electronics and this and that technology, batteries, this, that. That's where real value is coming from. But Bitcoin, it's based on thin air. And that's where I argue with that. because the mathematics behind it and the mining and that thing creates value, even though it's value that we don't see. It's the same way if I try to explain to my father, for example, why our CSGO Counter-Strike skins have value. And
yeah,
some of
worth
them are
like
selling
millions.
for millions and hundreds of thousands of dollars. He's gonna be like, what? It's just a color on a gun on a game.
Yeah.
But the fact that this game is one of the most played games, that this color is that rare, that it's so special, it's so hard to get, that someone is willing to pay the price to have it. There's only 21 million Bitcoins that they're ever going to be in circulation.
Yeah.
Right now, last I checked, there is like over 60 million millionaires worldwide. Which means even if every millionaire wanted to own one Bitcoin,
they
can't.
Yeah.
And I'm even going to make it even more extreme, because the accumulation that's been going on Bitcoin is increasing at like insane levels, that even if 6 million millionaires of the 60 million wanted to own one Bitcoin each, they wouldn't be able to do so. They cannot afford to do so.
You're going to pay more than that just to get it.
Yeah, pretty much. And that would be the case. Bitcoin's above $1 million.
Yeah.
And there's not going to be 21 million millionaires being made out of Bitcoin. It's going to be a much smaller number. And we're talking about things like BlackRock, Grayscale, big funds, people that are putting insane amounts of money to own very large portions of Bitcoin. I know people with 1,000 plus Bitcoins.
Wow.
Yeah, 1,000 plus Bitcoin is insane. You're talking about
100 million, something like that.
$100 million in Bitcoin.
Yeah.
So I know a few people that do hold that much money in Bitcoin. They're like, just stack.
Yeah.
Keep adding more and more money.
Yeah.
Doesn't like never stop. And again, like when you go overall, like what's going on in the entire industry, I feel like there's a lot of bad actors going. And like I'm saying, reputation, you only get once. So that was like kind of, again, the thing is, I swear to God, I wasn't doing financially as good as I am today. And I was getting really ridiculous offers that it's almost impossible, regardless of how much money you make or how much money you have, to say no to.
Mm-mm.
Like I got offered $50,000 to host a 1 hour Twitter space to mention their meme coin. That was like a month after Pepe. $50,000
For an hour.
For an hour for somebody that his account just blew up 3 weeks ago. And I had to like sit and be like, what the hell is going on?
Yeah.
Do I think they're going to do well? No. Am I going to feel guilty? Probably. And this is the thing. I thought like if I would start on that path, I'm going to feel guilty first time.
It's a slippery slope.
I'm going to feel guilty, and then I'm going to feel less guilty second time.
Exactly.
Like, yeah, people are going to complain anyway. Third time, fourth time, fifth time, 10th time. So now the thing shifted from I'm not willing to talk about pretty much anybody.
Yeah.
But if I'm willing to talk about you, I'll do it for free if you have a good product. One of the events I went to was with Arkham Intelligence. It's like one of the platforms that you track transactions on chain. And I've been talking about their product since I found out about it. And they were actually like, I had really good conversation with their team. They were like, we never like paid you anything. Like, why do you do this? I was like, you genuinely have a good product.
Yeah.
You have a really good product that I use and I benefit from.
That could help people too.
I'm not intentionally talking about your product. It just, I'm using it as a tool and I'm sharing screenshots from your platform.
Yeah.
And when I want to remind people to use a platform and how to make benefit of it, I tell them to use your platform. So it indirectly reflects by having a really good product that now this is the result of it.
Yeah.
That I'm talking about you.
Exactly. Yeah.
And I think this is the best way to move forward.
Yeah.
And on the other side, I believe in destiny. I believe everything is destined. I believe whatever amount of money I'm going to make regardless whether I partner with them or I don't partner with them. And it was like very ironic. I get a deal here. For example, it would be for like $50,000 for a day. Next week, I would get lucky with a trade that I made, like on a meme coin or whatever, and I would make the same amount of money that I made on that deal. And I would sit and like look back, and I would be like, "This is insane!" Like it was meant to be mine anyway. And probably if I took that deal,
maybe I wouldn't have gotten it this way.
I wouldn't have done this too.
Yeah.
And I would have like made money in a way that would make me feel bad, and when I would have just made the money anyway in a different way.
I think in yours, in this space in particular, Yazan, to I think maintain your integrity is very hard because you get exposed to so much. And not only that, when you're in, what I've realized is when you're in the industry, there are things you will know that Khalid doesn't know. Like me and you, a project will be coming up, like this new shiny project called Mahmoud project, for example.
Yes.
You know, and I'll be like, yeah, yes, and dude, this Mahmoud project, all my friends are investing. I hear good things, but you, because you're in the industry, you're like, yeah, maybe not Mahmoud. You know, maybe go for the Aboud coin instead. You know what I'm saying?
Yeah.
And I think that is something that attracts a certain type of person because also it's so volatile. It still is there are a lot of gray areas still as in the space or whatever it is, different regulations
100%.
around the world. So it's almost like you're in the Wild West basically, and you're just trying, and there are shots coming from either side, and you're trying to figure out how to walk and how to figure things out. And I think this is why you can be in the industry in different ways and in different levels.
100%.
You know, I can be as Khalid, I'll just, every once in a while, buy some crypto, put it away, buy some crypto, forget. And then there's the other extreme, which is like you, which is really going deep in the space, understanding the tech, the engineering, building, partnering with projects and so on. So I think over time, to get that full adoption, until we get to a stage where more Khalids, I think, or more of the general public is going to be very difficult. And I believe over time, as things change, we're going to be weeding out a lot of the bullshit that's going on.
100%.
I wanted to ask you, Yazan, so these are, so just around, I could sit here and talk to you for 6 hours or like 10 hours, but just to be conscious for the people, and I have another meeting. I wanted to just run off our conversation today, man, with this. 2 questions I ask all my guests, okay? So I know if I was you, what my answer would be, but I want to see what yours is. Looking back at your life, when I ask you the question, either personally or professionally, what are you most proud of for yourself? What would you say?
The development of faith in myself. I think a lot of people lack faith in themselves. We as people often tend to be doubtful. If you want to start a business, you want to think 1 billion times to make sure it's perfected. You may overthink it. Before taking a step, you end up never taking a step. And investing and like having faith in myself, I truly believe now in myself to a level that wherever you throw me, I'll land just fine. Whatever life comes at me with whatever type of hardship, I'll manage through it. And it just changed me to a different person, that I'm willing to do new things. I'm willing to take on new challenges. I love anything that's challenging by nature. But at any time, I feel like crypto is not becoming too challenging for me. And it's not something I plan to do forever, by the way. Like, crypto is not something that I imagine my life like 40 years from now, I'm sitting trading. Like, I don't imagine myself doing that.
Sure.
But I think it's the same way as you use the S&P 500 as an investment tool.
Yeah.
I think that's how crypto should be seen as.
Yeah.
Again, like the industry is changing. Now they're making indexes, like Coinbase is making one called Coin 50, which is including Bitcoin. Things like Dogecoin and Pepe are into it. It's like an index similar to S&P 500, but it's like 50 cryptocurrencies of their choice, and like you buy into it and they manage it. And it performs based on how these 50 coins perform. And I think this is great. And this is where I would love to see crypto heading towards, because there's a lot of bullshit, let's be honest.
Yeah.
But there's always going to be top 100 that
Of course.
are going to be like recognizable, and 50 is much better.
Yeah.
So I really would love to see more people, companies getting into indexes, making it a thing, so that me personally, I would be like, actually, this looks like very well managed.
Yeah.
You have 70%, for example, exposure to Bitcoin, 1% to Solana, 1% to Ethereum, 0.5% to whatever. And these are all seem pretty solid investments. I'll leave my money there. I'll just put my money in and invest in it long term. But honestly, I love challenges, anything that feels challenging, to take on a new challenge. And that's like really what I'm most proud of. I could tell you like a lot of things. Getting married is something I'm proud of. Graduating university is something I'm proud of. Making it through the tough times is something I'm proud of. But yeah, mostly faith in myself. And that's about it.
Yeah. I think though, I'm so happy you've reached that place, because that level of self-confidence is, I think, if everyone could reach that level with themselves, they would see and move in life in a completely different way.
This is where I truly like felt I'm happy.
Yeah. Yeah. Because I'm be okay regardless.
It's not really that, but it's for example, like I'm happy in that type of way, but I'm always pushing my limits.
Yes.
I always like want to do more. I always want to improve. I want to, but the fact that I'm in this state, rather than seeing myself and like, what am I doing? I have days where I don't do nothing. I just sit at home, and for example, in the past, I would be like, why I didn't do anything productive? I didn't do anything. Now I'm just like, I'm completely fine with it. I earned it, honestly.
Yeah, exactly.
I honestly earned it.
Yeah.
This is like refueling. I think we don't pay enough attention to ourselves.
Yeah.
A lot of us that are focused, like you probably with podcasts, with non-traditional jobs, we tend to like go through a path where we're going to burn out.
Yeah.
Always we feel like we're getting close to a burnout.
Very
stressed,
true.
Something goes wrong. Like imagine if I was an hour late. Like we're now, I can't believe it. Like it's been like more than 2 hours. Imagine if I'm like an hour late for some reason. There's traffic, there's an accident on the way. You're probably going to be stressing out.
Of course.
Like you have time, like what are you going to do?
Yeah.
But when you reach that level of state, I call it the flow state.
Yeah.
I'm just like locked in.
Yeah.
And I honestly got more conscious about it, I would say a year ago when I really accomplished it. July last year when I was like, okay, did I achieve everything I wanted with crypto? I did. I am exactly where I wanted to be. I even outperformed myself for a couple of years ahead. I think I should start paying attention to my health.
Mm-hmm.
And I fully focused on like, okay, I was like always going on and off to the gym. Last time I was consistent was like when I was like 16 to 17 years old, when I went like non-stop for a year to the gym, worked out. I was like a little bit overweight. And at that time, for a couple of years, 2-3 years, working remotely at my apartment, doing absolutely nothing but sitting, watching my 2-3 screens, and that's about it. Doing my thing, fully locked in. I was spending not less than 14 to 16 hours on my PC every day. Single day.
Yeah.
Including weekends. No vacations, 7 days on. No days off, every single day. I'm doing the same routine, which resulted I became overweight, lack of activity, whatever. Since then, self-improvement, fully locked in.
Yeah.
Got into this flow state. Since then, I'm down like 18 kilograms.
MashaAllah, congratulations, man. That's awesome. That's a lot.
And now I'm focusing on like other things, mainly my health. Now I'm making sure to get like 15 to 30 minutes of sun every day.
There you go. Yeah, okay. You're
my
good.
Steps,
the cold showers, the saunas. Okay,
not that far.
Not yet. That's next, by the way.
Not that far.
When you do that,
I'm now like focusing on my health, and I think
like
it's just like investing in myself. It's not only about money, because there's a lot of things that money cannot buy. Health is one of them.
Yeah, very true.
So, reading books, doing things that I didn't used to do before, things that were like unusual to me. I honestly never thought I would like reading a book until I read one.
You just need one.
I swear to God.
Wallah.
The thing is, because I don't know, like I hated reading and studying for school.
Me too. Same.
And I just realized that I hate reading stuff that I don't like.
Yeah. It's boring to me.
But when I read books that are interesting to me,
you dive into
hooked,
the book.
bro.
Yeah,
You can't leave the book.
Of course, man.
You're like,
100%.
one more page.
Yeah,
one
yeah.
more
It's okay.
chapter.
Yeah.
And I realized, like, I really never thought about it like that, because I genuinely thought, like, okay, we have the internet. I can research anything. This book is good. Give me the summary. Now, ChatGPT.
Yeah.
Give me the summary of this book. But now I want to know the full stories, you know?
Exactly. You see, now you crave like the depth now,
Yes.
more than the breadth.
100%.
Man, Yazan, I wanted to say first of all, from asking my last question, first of all, thank you so much, man, for coming on the show. This has been like, I've been sitting and like listening. I'm like, I feel like I got a crypto masterclass from like an expert, and no one else is here, and he has all his attention on me. I'm so lucky. So thank you so much for answering so many of not the questions that I have, but I'm sure millions of other people have about this space, for getting us the context on the trading, on the community, the advice you have for someone who wants to get in. So for anyone looking to enter the crypto, Web3, any of the space, there's so much they can take away from this. So I wanted to first say thank you so much, Habibi, for coming on the show.
It's a pleasure.
And for my last question, what is the message you'd like everyone to take home with them today?
Honestly, this is the message that I always tell to people on spaces as well, is that everyone thinks crypto is a place to make quick money. It's not. Crypto teaches you something about investing. It may be making quick money for some, but I do not want nobody to go through 8 years of misery, or like 6 years of bad experiences, to get into like one point of time where they realize I was making a bad decision. Because if I didn't work in crypto, I wouldn't have succeeded. I tell anyone that's like planning to get into crypto, like invest into crypto, if you're not willing to put the money, forget about it, and think of that money as lost, don't put the money in crypto. If you want to see money grow, put money in the S&P 500. Like if the only crypto I would put money in at this time is Bitcoin. Maybe we'll have another conversation in a few years, and then I'll be telling you this crypto index is now like doing well. It's like doing good returns. But for now, the only thing that's proven itself over longer periods of time is Bitcoin. Nothing else so far. Take profits. If you invest short term and make quick money, take profits, because nothing lasts forever, especially in crypto. All the cryptos that go up 100x and 50x, when the bear market comes, everything goes down 90%. Even Bitcoin went down to like 79, 80% last time, and 99% of cryptocurrencies went down lower than 90 to 95%. That means if whatever amount of money you had, you have 1/10 or 1/20th of if
what
not
it was.
less.
Yeah.
Find something that you love, and that's what you should be doing. This is what I tell people again. If you find something that you love that you can do, crypto or not, and you can invest into that and focus into that, put your money into that, trust me, it's going to have much bigger return than crypto or anything else would.
Yeah.
Because investing is one way, investing is one thing, and crypto is another thing.
Mm-hmm.
Crypto is a way of investing. It's a technology. It's like saying, investing in websites or investing in the .com bubble. Or like, It's the same kind of story. Not everything is going to succeed from the crypto industry. And how often do we hear stories about people succeeding because they're investors? Sure, you hear about the Wolf of Wall Street that scammed God knows how many people, or the guy behind the Big Short, people that got lucky, Warren Buffett. Investing is long term. like even from the US, if you want to be millionaire, the most success is going to come from investing.
Mm-hmm.
Invest in anything that is going to have, that has sustainability. So investing, that's one thing. But the best returns you see on people, the most successful people are people that believed in themselves, did something they're passionate about, pushed themselves to the limit, try new things, travel, have different experiences, talk to different people. Talking to people is one of the most beautiful things I learned. You learn from people from different cultures. This is something amazing about Dubai. You meet people from all
everywhere.
different backgrounds,
Everywhere.
all different, religions, experiences, and you get to share, to get a taste of what people went through, what people do, the differences, and it's something that's very beautiful. But we as people, we integrate very well from all over the world, and this is again a proof of it. Look at Dubai. We integrate as people in all different ways possible, and just improve day by day in whichever way possible. If you improve 1% per day, you're talking about even not 1%.
37x, right?
1% per week.
Per week, yeah.
Any improvement, just 1 year after 1 year, as long as you're growing, as long as you're improving, you're on the right path.
I could not agree with you more, man. I also read that book, Atomic Habits, James Clear, 1%. Guys, make sure you check that out. And that was that's how I try to live my life every day. Everything you talked about, going down the health journey and the reading and the this and the that. I went through that whole phase 2, the weight loss, whatever. I will tell you, as someone who's now in his, well, I wouldn't consider this the third phase, but has gone through these phases twice. It's so easy to fall off the wagon, and it happens so small. So like although you can't do 100%, keep doing that 1% because you're still improving and still moving forward. Yes, and man,
thank you for having me,
bro. This has been so much fun, man. I knew, like, just from our conversations, this was sometimes before recordings, you feel a certain chemistry with a person. I'm like, this will be not only because they're an expert in the space, we'll have a great conversation and be a great guest, which this was. So thank you so much, man.
Thank you for having me.
If people want to reach out with you, work with you, connect with you, what's the best place for us to get in touch?
Twitter probably is the tweet at me.
Okay.
It's Yazan XBT.
Okay.
That's the best way to reach me. I always check tweets. I haven't been active really much lately. I told you, like, I'm a content creator. That's why I don't consider myself an influencer.
Yeah.
Because I couldn't care less without my platform.
Yeah.
It's just something that I have. People that know me, they know me. Even if, like, my account goes away, I jump from another account.
Yeah.
Talk to people on Spaces. People know my voice.
Cool.
So
it's Twitter Spaces X is probably the best one.
Definitely the best way to reach.
Perfect. We'll make sure to put that in the show notes. Yazan Habibi, thank you so much, man. This has been amazing.
Thank you.
Thank you. Guys, to everyone listening, please make sure to like, follow, share, and subscribe to the podcast on all channels at Hope It Helps Pod. And as always, guys, hope it helps. Peace.
Well done, man. Well done. Really amazing. You're really amazing.
Awesome, man. And that's another episode in the bag, guys. Thank you so much for tuning in. I really appreciate it. The goal of this podcast is to provide, as I like to call it, education on demand. We cover a wide range of topics, and the goal is to provide you with the knowledge, the tools, and the insights to improve your lives both personally and professionally. And if you're enjoying the show and you're enjoying the content, if you could please do me the small favor of hitting that subscribe button, would really help me build the show and build the channel, and that's all I ask. Stay tuned for more inspiring conversations, bigger guests, and as always, guys, hope it helps. Peace.